Good afternoon and good evening to the rest of you. We are back for another episode of Bitcoin Magazine Live. It is I, your host Q, coming to you yet again from my mother's basement, and I'm joined by my co-host P. How goes it, P?
Fantastic, as usual. I almost cut my arm off with my my Bitcoin staff from yesterday, the giant wrench with the 3 kitchen knives taped to it. Had some open dimes hanging off. If you haven't seen that yet, you can go check it out from yesterday's stream. But yeah, I was swinging it around like a madman, and it was a close call. But I'm here. I'm safe. I marked myself safe on Facebook, and I'm excited for this conversation.
Look, I'm just grateful that you did bring the weaponry, because the fight for Middle Earth yesterday got really testy. But thank you to Bitcoin Gandalf for joining us yesterday. And today we have a special guest, one of my favorite people that I've had the chance to speak to. If you haven't read his book, you need to read his book. Don't walk to Barnes & Nobles. Like, before I even get to saying his name, you should have already bought it on Amazon. But the book is called The Seventh Principles. We talked with Eric Yates, the author, months and months ago, but that is not why he is here. Eric, I brought you here for one reason and one reason only. I want to see blood in these streets. You have been tearing it up on Twitter. You have not been holding back. It's been an absolute treat to just sort of see you, I like to say, come and break out of your shell, if anything, as this quiet economist type who decided to actually point out, wait a minute, these people are the ones actually running the show, but you're an idiot, and this is why you're an idiot, and this is why you're an idiot, and this is why you're an idiot. I'm going to stop talking, and I'm going to let the smartest person on this call right now start talking. Eric, how are you doing?
Oh, I'm doing good, man. Yeah, I've been waking up a lot this week and choosing blood on Twitter. But look, I try to be more measured in what I say, but every now and then, you see a few things going around like this. Whoever the PhD economist was, who was going off about Bitcoin transaction speed and how that's a fatal issue for the network, and then you have Krugman retweeting it and making the same argument. And what did I comment on that? I think, oh yeah, just because the first thing that came to my head was I know 14-year-olds who don't make this logical fallacy, and they've read more than you guys have. And we're talking about these highly respected people in the economic and financial media who continue to they continue to push this narrative over and over again, and they just haven't read more than like a cursory review of an understanding of this topic, and then they're opining, greatly opining. And yeah, it's just kind of absurd. And it's not that I think that they're stupid. It's not that I think that they're dumb enough to really make these mistakes. It's just that they're clinging to a narrative that supports, their current user base. And I think that that's wrong. And I think that, you have to fight fire with fire a little bit sometimes.
Let's unpack a little bit of this, because like you bring up, I think a tweet that a lot of Bitcoiners got a chance to see. I'll read it off. It was from Pontus Rendall, essentially saying, the more I read about crypto, the more I realize how useless they are. Bitcoin can theoretically handle 7 transactions per second at a cost of 2,500 kilowatts an hour. An average home uses about 1,000 per month. A transaction takes about 10 minutes to be settled. I mean, your response I thought was brilliant, to just read some books. I think he should just read your book, but I think this is, in my eyes at least, my response to him was like, you're comparing two things that aren't related. Why don't you actually instead go and compare how much energy it takes to maintain just one credit card processor, and how long that transaction is going to take to get settled, and all the energy that gets used just for one store and one bank to have that transaction through line. So I'm curious if you kind of see it like that, or maybe you're looking at things a little differently with that example.
Yeah, I think that well, I guess the first question is, how do you want to attack and how do you want to approach that argument? Because there's a few different areas that he's covering with all of it. I mean, he starts off with, we don't have enough transaction speed. He compares that to the cost per energy per transaction, and then he makes a comparison of transaction speed to the Visa network. So like those are 3 major fallacies right there. Number one, the transaction speed of a base layer should be compared apples to oranges with another monetary base layer. So if we're comparing transaction speed per second, then we want to compare that to what are base layers of the current financial system and what is their speed. And that's ACH, Fedwire, Clearinghouse, all these different systems that we use. And those take, days, if not weeks, to actually have some form of settlement. And they can't handle as much and do it in the same amount of time that Bitcoin can have. So that right there is probably like the first main issue that I would attack, and just like, cuts the legs out from under it in the beginning and say like, no, it's just, that's the wrong comparison in the first place. That doesn't make any sense. And then you move to the energy argument, and the question is, well, all this energy that it consumes, what is that going to? Is it going through to transaction throughput, or is that going through the network for another purpose? And that other purpose being that we're trying to actually secure the network. So it's a very, once again, an apples to oranges comparison, and it's the wrong metric to actually be looking at. We want to be saying, the amount of energy that's used is for the security of the network, and that's comparing the energy consumption of these alternative networks as well. It's a very different comparison.
Yeah, I feel like there's so much wrong with that statement. It's like almost difficult to unpack. It's sort of like saying like,
right,
this one time I was walking down the street and I stubbed my toe, and also a seagull shit on my head. And you're just like, what what does that have to do with anything? Like, where does the claim that Bitcoin can only handle seven transactions per second, where does that even fucking come from? Is that an average of the number of like what is that even from? Do you know?
Oh, that's a good thing. So I sourced it in my book, and I'm actually trying to remember. It's it's based on just historical throughput that we've seen and where it's topped out during prior bull markets, and it's typically in that 5 to 7 range that we've seen, where fees, the economic balance between fees and the ultimate throughput that we'll see on the network.
So that's the measurement of on-chain transactions then,
Right.
without any consideration to the Lightning
But it's final
network.
settlement, right?
Yeah, final settlement on-chain transactions. Yeah.
Yeah, and whereas like ACH, like it's literally a text file that's sent over like FTP, and as you said, takes fucking days. And like,
Yeah, because people have to call each other up, and banks have to update accounts, and then they have to call the other bank, and they have to say, okay, we're making this change. This is the address that we're sending to. Is that correct? This is the person. And they have to run checks. Is this person allowed to send this money? Are there any sort of, legal constraints around that? You're also going to get tracked if there's, a certain degree of value that exists on that transaction. If it's going international, there's a whole other level of, checks and balances that it has to flow through. That's a system that you're dealing with, that you're comparing it to. And that's why it takes days. And if if you got some issues with it, then it could even be weeks, and it could also not go through at all.
yeah, I've never understood. And one of the figures that I've seen thrown around as well is,
You're muted there, P.
sorry, everyone. What I was saying, one of the things that I've also seen thrown around is like Visa or MasterCard, throughput, which is ridiculous because credit cards payments can be clawed back for like, what is it, like 3 or 6 months even? So like, where do those numbers even come from?
Right. So it's like, once again, it's apples to oranges, right? Like Bitcoin is a bearer reserve asset. It's final settlement. It's an asset where when you send it to another person, they own the asset themselves. They have full control over it. That is, it's not a credit-based monetary system or a credit-based financial transaction system. Credit cards are credit. When you send, whether it's, and you can think of it over Venmo or over Cash App and all the same ways, when you send money to another person, they don't physically receive that money. When they take that money from their Venmo account or from their credit card at the end of the month, and they either settle it to the account or on a credit card, they pay it off. That's when the final settlement occurs. So effectively, the purpose of a credit card transaction is to export transactions to a layer of credit where we have this centralized party like a credit card company, and they have these accounts. You make a transaction, they update their accounts. They're taking the risk that you may not ultimately pay that money back in the future. So they allow us to do a lot more rapid transactions very quickly, as opposed to you having to ACH payment the coffee shop that you go to and all these other different places. So it's a similar concept.
You'd have to order your coffee like 3 days prior. Be like, I'm going to ACH you the money. I'll show up 72 hours from now if we're both lucky, and then you'll give me your coffee.
Yeah, exactly. And so it's just, we create these systems so that we can have more transaction throughput, and that's like one of the primary nature of these credit card systems, and that's why there's a 5% transaction fee that they get paid in order to take on that risk of final settlement when it does come around. And so once again, it's just a very different comparison. Now, if you were to make the proper comparison to a credit card company, we could say, okay, well, we have the Lightning Network. What's the difference? There's no 5% fee. It's also fully collateralized, and it's faster. So the Lightning Network itself is a true innovation. It's like a fully collateralized credit system.
Yeah, that cannot be understated. It's pretty revolutionary. Also, I'm realizing we didn't give you the opportunity to introduce yourself and tell listeners who you are and what you're about. Can you spend like 30 seconds giving us the spiel?
Totally. So I'm a dude, and I started off in finance. I worked for a firm that did corporate finance and restructuring. So we were kind of like, we're the largest consulting firm in the world for like bankruptcy. So usually when there's like a major bankruptcy, you have advisors come in and take control of companies and like turn it around. So I started off my career in that. And then I moved to a private equity fund where we would invest in companies that were like distressed or declining in different ways. So I started to get a lot of exposure to a lot of the malinvestment that exists within our economy through a lot of that. All the while, I've always been, very free market minded economics thinker. And that's kind of like a hobby that I was always interested in. And, I heard about Bitcoin in like 2015. And then in 2017, I took a little bit more, 2016, I took a bit more of a serious look at it, but it wasn't until 2017 that I like really came around to it. And because, I'm a CFA as well, like I have this very traditional finance knowledge base, and it took me a very long time to come around to Bitcoin and say, oh, I understand its value proposition. It's a solution to central banking. And I thought about it through this traditional finance framework that I see people, to this day making all the same mistakes that I made for years. And I eventually came around to it once I kind of realized like, oh, this is a monetary asset. It's not based on cash flows like all the other assets that we're constantly assessing. Once I came to that and I realized this is a solution to central banking as you expand throughout all the other capabilities that it has, other than it's just like a scarce form of money. That's when it really hooked me. And then it was towards the end of 2019, I decided that I wanted to, quit traditional finance. I always had this kind of like nihilistic view of that world. The game is what it is. And, I don't really know how this ends, but one day it's going to end. And once it clicked with Bitcoin with me, I was like, oh shit, this is how it ends. And so I said, fuck it. And I sold my place, moved home with my mom, and just gotten cracking on supporting all this. So Q, we're out of mom's basement as well right now. And
Dude,
yeah, I wrote a book too. And
don't make me feel bad.
Come on, tell the people the title of your book. It doesn't have to be like a super secret.
Yeah, The Seventh Property.
And what is that a reference to?
Based on my whole spiel, I realized quickly that there wasn't like a good starting literature for financial people coming into this. And I think that the thesis where you have to, before you can even talk about Bitcoin to people, you have to define the problem for them because it's a complicated problem that people aren't very aware of. So when I came from the traditional finance world, I didn't see a lot of resources that were really selling people in the right way, not really as much based on theory, but based on historical facts, trends to really define the problem. And I just kind of got deep and I wasn't really planning on writing the book. And then I just was writing core information out and I really quickly was like, no, I think it makes total sense to just turn this thing into a book. And I did. And then, and really the name, The Seventh Property, is in reference to this. I defined this framework in the beginning. People I think like a lot of people, when I first was getting involved in the industry, were kind of confused about how, and well, I think still to this day, people are very confused about the ideas of like what backs Bitcoin, what is fundamental to Bitcoin. And that's a confusing question because there's a lot of different frameworks from which people view it, typically myopically from like the background that they come from. If you're an engineer, you say it's backed by like energy, or like, if you're somebody with an economics background, you'll say it's backed by monetary properties. And I think, what I wanted to push in the book at the beginning is I think it's really important to think about these questions from an economic framework. And it's not that the other ones don't have value, but we need to be precise with our words because we're on the verge of a monetary revolution here. And the way that we frame things and doing that very thoughtfully so that we can argue at, the highest scales when, one day I think we're going to see 60 Minutes with like, Paul Krugman on there and some sort of authority in the Bitcoin world. And we're going to have to be very clear with exactly how we want to be pushing these messages. And I think the economic framework is very important for that. So when I got into this, I was like, okay, there's all these monetary functions. There's these monetary properties. If you read the Bitcoin Standard, Safety talks about Bitcoin scalability across these different dimensions. I was like, how do we think about money? So I kind of frame it in the first chapter and I say, here's a framework for thinking. And I go through the dimensions. I go through the functions, the functions being like store value, medium of exchange, unit of count. And then what I do is I boil that all down to like really all of that is enabled by 6 monetary properties. And, scarcity, durability, divisibility, portability, fungibility, all of those different properties. All of those are the fundamental way of assessing, like, here's what makes Bitcoin good. And when you think about it from that framework, a property of something is something inherent to it. So it's not backed by anything. And this idea that money needs to be backed by something is more of a fiat type of thinking because, gold wasn't ever backed by anything. it was only once we had paper money in the evolution of paper money, where paper money had all these certain monetary properties. It was very efficient. It was highly, it was highly portable. We had different inventions like the telegraph, double entry bookkeeping, the printing press, and then paper money was perfect for moving trade across Europe very efficiently. Problem with paper is that it's not scarce. So we had to back it by something that had a monetary property of scarcity. And that's what gold standards emerged off of. And that's why the concept of money needs to be backed by something emerged. And then once politicians really got a hold of this and we turned into a fiat based system, they totally just retarded the meaning of the word, and now it's backed by the government, which just means violence and control. And people don't even know what the word actually means anymore. But I think it's important to really think about money from the perspective of good money doesn't need to be backed by anything. It has strong inherent properties to it. And now all these questions of like energy, well, it's enabled by those things. The same way that the Bitcoin network is enabled by contracts, it's enabled by jurisdictions, it's enabled by mining hardware, it's metal, different other commodities are involved too. And in fact, energy backs everything. So it's not necessarily a distinct way of defining, some sort of backing for it. So I think that there's a lot of things that enable Bitcoin to exist, but if we're trying to think about it from an economic framework, then we really need to boil it down to good money isn't backed by anything. It has inherent properties, and it's enabled by all these other different functions that exist in the world, which pretty much boils down to capital and labor that support its existence, in the same way that gold has capital and labor that supports its existence. So getting back to your question, like, what's the seventh property? I think that, Bitcoin was an innovation in the truest sense that Bitcoin allowed for us to have all these benefits of, the efficiencies of, portability and divisibility and fungibility that exist within, kind of like the paper system that we had prior. And it enabled us to have all of that, which was formerly a trade-off, which is why we had to tie gold and paper together to get the benefits of both. And we actually just collapsed that all into one thing. We said, no, like, we can actually have the benefits of both here. And that's why it's a very major innovation. So what makes Bitcoin distinct from all other forms of money in history is its immutability. And what I boiled it down to is that immutability as a property, it's enabled by decentralized production, storage, and verification of money. So if we have this monetary network and it's decentralized across those three functions, which are, the three primary ways that financial intermediaries get involved in some sort of monetary medium, then we have the property of immutability. So now that we've actually created this innovation, whether it's Bitcoin, whether it's some new innovation that emerges 20 years from now, who knows what's going to happen? We need to be assessing money from the framework of 7 properties and defining good money as something that actually has a property of immutability as well. Because we made that innovation, there's no reason in going backwards anymore. And that should be part of like the fundamental framework.
I love it. Also, I have to ask, it looks like you are sitting directly in front of a sleeping bag.
So there's my whiteboard behind me, which I always have, and I had a bunch of stuff on it, and then the other side had a bunch of stuff on it, and it was like right before the call. I was like, oh crap! So I threw a blanket over it.
Love it.
I'm not a big fan of putting in the backgrounds. Yeah, some very, very secretive stuff.
One thing I want to unpack this, because to be honest, I've literally cited your book in so many arguments for now the last like 6 months roughly, and it was the way you broke down the history of banking, and more specifically the history of how we have literally done this, gone from a gold-backed fiat currency, removing the gold backing, and then on an average time span of almost 50 years, there's a catalyst that causes the central government to essentially come out and say, hey, the price for this good commodity or whatever is now locked. And then it's like clockwork. Then the whole system collapses, and then you have to restart it. And we're kind of bearing witness to that. And I'd love it if you could kind of maybe rehash the first iteration of this with the banks in Italy in the Renaissance in the 1300s, and maybe what you're seeing similar today.
Yeah, I think I think what's like most relevant to the system we're in today was probably more what happened in the Bank of England with the goldsmith banking. So, I go into the banks in Italy because those were kind of within the Western world, the, the very first example of, the emergence of fractional reserve banking, its failure, and then also what made those distinct is that they actually sustained periods without fractional reserve banking for quite some time where they were very successful, and they were actually just they're operating as depository institutions where they were simply holding funds. They weren't lending beyond their reserves, and they were charging a fee for doing that service for people, and that was always a very sustainable system. But our modern system is really more built off of what emerged from England. And in England, there was it was pretty interesting. So if you go back to this point in time when we had the Middle Ages and people were emerging out, and the idea of banking was kind of like this emergent phenomenon. People who are accumulating wealth at this stage, they were a lot of it, that's why treasure chests existed, for example. Like, people would actually hide their money, or they would store it on their person, or things like that. And then it was only the ultra wealthy that were storing their money. So, like, I mean, an early example of that was there was the Roman temple of Huno Moneta, and that was where a lot of that. So that's where actually Roman coinage existed. And the name Moneta, it's a personification of one of their gods, and that's actually because the minting was done in within that temple. Monetary comes from moneta, out of that Roman term. But that's where a lot of the wealthy back then would store some of their money, within that temple. And that was kind of what a lot of people would depend on. They kind of depended on religious institutions or government institutions for storage. It was like this wealthy service that existed for centuries. And then it was in England where people were storing it in monasteries, and they were storing it in a London vault that was controlled by the government. And there was, at first, so Charles the First ended up appropriating a lot of that wealth that existed within, the people were storing within those vaults. So it caused this huge scare within England, and people started to, take their money privately. They didn't want to have it in these centralized forms of storage. And then we kind of had the emergence of, like, this initial private banking system, and that was the goldsmith bankers. So there were these goldsmiths who had vaults that they would be smithing different monetary metals for people, and because they already had the infrastructure built out, it made a lot of sense for people to just start storing their money with them. They had all this excess capacity. They'd charge a fee. You store your gold with the goldsmiths. And the system kind of emerged privately, in that, the goldsmiths really quickly realized, well, Jim has got a bunch of gold sitting in the vault. He's not moving that anytime soon. It's been sitting here for, a year and a half now. We could probably lend 10% of it out to somebody else, and he wouldn't, he wouldn't be the wiser. And we had this system of fractional reserve lending that emerged privately for a while. It gets a lot more confusing to that, and I won't totally go into all the details of it. But effectively, they started creating a lot of different claims upon the same part of gold. You had a claim from the depositor. You had a claim from the person they're lending it to. But what they did was also really interesting, is because they were concerned of appropriation of their wealth from the governments, they wanted to utilize the legal system in a way that would protect them in a certain way. And I found, when I was researching into a lot of this, I found this paper from, it was from this professor at a South Korean university. His name escapes me right now, but he goes into the legality of what they were really trying to do. And it's similar to like how modern day trust schemes work, where if you put your assets into a trust, because a trust muddies who owns the asset. It's not really owned by you. It's not really owned by the beneficiary of the trust. And you have this trustee who kind of has control over it. So it puts it into like this limbo world where the legal ownership of it is a lot foggier. And it was effectively kind of a similar concept to what they were implementing in these goldsmith bankers. They started issuing depository receipts, and it was very unclear over the ownership of ultimately who owned the gold. And a lot of the depositors got on board with allowing them to do that, because it was creating some form of like legal protection, whereby if the government says, we're going to come to a goldsmith banker, we're going to, appropriate some of their wealth, then we are going to not only have to deal with a major contraction in the economy because the money supply has expanded a lot further based on the amount of gold sitting there. So not only is the risk of economic contraction a lot more, but also if this goes through a court system, we don't really know how it's going to pan out. There's a lot more like legal protection from it. And the details of which are a lot more complicated, but that's kind of like a high level idea. And so anyways, that system emerged, it expanded very greatly, and then it ultimately ended up having a very major contraction. And that was what was utilized by, you know, the powers that be at that time, the government of England, to ultimately say, like, this isn't very sustainable, that, you know, the Bank of England needs to have control over this. And the Bank of England ultimately emerged as a way to, it was, when the government was also participating in this system, and then the government ended up defaulting on their participation in that system, they created the Bank of England as a way to pay back their debts to the goldsmith bankers. So the government was the one who ultimately kind of caused this initial issue. And when they created that, and the Bank of England emerged. Bank of England also emerged for a variety of reasons. You know, they were at war with France, and they needed to finance that too, and that was another major motivation. But it was funny because when the Bank of England emerged, it was ultimately as a justification of to pay off the people that they screwed over in this private banking system, but they inherently blamed how the private banking system was unsustainable. And ultimately, we kind of see this pattern of centralization throughout history that occurred through these banks, where they would the government would cause either an issue in the private markets, or they would use an issue in the private markets as justification for them to get more control over the system. And then ultimately, they would take a lot of that control themselves, and they'd cause the same problem themselves. So when we had the Bank of England emerge, well, what happened? It was initially, it was actually pure fiat money, and they tried to make that work, and they issued it to private markets, and it was completely rejected. So they reverted back to a gold standard. And then eventually we saw the Bank of England expand and then ultimately default on its position in the future. And we see kind of like these emergences of central banks out of war, out of a need to finance, you know, major debt obligations, them taking on this responsibility from private markets, ultimately causing the exact same issue themselves, and then ultimately having some sort of major, you know, economic dislocation and regime change that occurs at a certain point. You guys still with me?
Yeah. No, sorry. I got distracted, and I greatly apologize.
I was just
Yeah, sorry.
processing
I was rambling for a bit there.
No, it's fucking
No.
great.
There's an interesting thought that I've kind of been stuck on it, and maybe it's just because like I'm stuck on it and I refuse to give it up. But the idea of price fixing and how it sort of really is the catalyst for a lot of the collapses here. I'm curious if you think or are paying attention to any commodity in particular that the U.S. government may or may not try to insert themselves and insert some sort of a price regulation or cap limit.
Sure. Yeah. I mean, I think, well, you know, if I guess if the question is try, they'll try to do whatever they can. But, you know, I think what what the U.S. government is always drawn to is basic needs and commodities that are, you know, primarily associated with that. So energy and housing. So, and we've seen, obviously, we're seeing calls for that. But what's going to happen in the in the energy industry is pretty interesting. You know, I'm not an expert on the energy industry, and there's a lot of different ways to speculate on how it'll go. But in the real estate markets as well, I think that we, you know, hopefully we won't, if the demand from, you know, some of this quantitative tightening starts to really ease that market. But, you know, I would look to those as kind of the initial for price controls that are going to be implemented, and we're certainly going to see them in some form, one way or another.
I mean, look, I literally just went and paid $5.89 for gas at Costco of all places, and I'm almost willing to accept one of the idiots to come out and say, hey, the price of oil cannot go higher than $150 or $250 a barrel. I want to play a little thought experiment though. if you'll entertain this. Like
I
what?
love to play.
So whoever we want to say, but let's just say the U.S. government has now come out. Oil and gas prices are so crazy that they are saying we will not pay more than $250 for for a barrel of oil. What happens domestically and what happens internationally, in your opinion?
Well, okay, that's interesting. Um, so the first thing I'd say is when you fix a price, then you have a supply and demand imbalance. But I don't know enough about like the reserve levels and how that all works within the market. So the first thing is if we do start price fixing, that I would assume they would initially default into the option of increasing the supply of the reserves that we have sitting around. I don't know how long that expands or what the runway is, or if that can ultimately bring it down to a certain level. But just assuming that analysis like ceteris paribus, I think that if you have a price fix, then you typically have a supply shortage in some form. Hopefully that can be made up by reserves. And then on the international level, it's not good, right? It's once again a supply shortage that exists. And I think the kind of the interesting piece around this whole discussion is the sanctions on Russia. We effectively created, similar to like the crisis in '08, we created this distinction between commodities, and we effectively created like a new class of like subprime commodities. All these Russian commodities that have been sanctioned are now kind of like these subprime assets. And but and typically would solve that issue through a bailout of the system. And we have a buyer that steps in. We have a centralized buyer that steps in. So it's very unique to the situation is that, the buyer who steps in is the one that's sanctioning the purchase of it in the first place. So we don't really have a buyer of last resort. And, what I think would happen is that the people who are the countries that want to opt into support of Russia or don't have the same political ties to the US, they'll probably start opting in as a buyer of last resort. And this is happening across a variety of different things. So energy markets and energy is the least because of how dependent we are on it. But all the other commodities that Russia is creating, as well as their debt, which we've seen this week, and that they're blocking a lot of the countries, the NATO countries are blocking the ability for Russia to actually pay it. Russia's saying like, well, we can't pay it. We're ready to pay it. And they're saying, well, we're not allowing you to pay it. So now there's all these legal scholars hopping in like, are they in default? And, they're going to have some sort of big debate about that. But what I see is like, kind of, so from the area that I came from, you have like distressed debt buyers, and they're people who just like wait for opportunities like this, where you have to get through a legal system, and they specialize in understanding how that works with that. And, so I'm guessing on the debt side of things, what we would see is Russia is going to have probably some class of like distressed buyers step in. And it's because this is happening on an international level, that's likely going to be some form of country. It's like if you can buy a bunch of super cheap debt because they're not being allowed to pay it, then you might as well step in and do it. So the question is going to be which countries are we going to see that's going to step in and do that? We have China with Argentina and Brazil are talking and in discussions about supporting one another and all those other different alliances. So I think we'll see people making up for that difference in some sort of form there as well. But a lot of this stuff gets into geopolitical arguments, and that's complicated. I'm not an expert on that.
Cool. So I'm going to ask you a geopolitical question on that note.
Please don't.
Okay, fine.
It's too late.
I want to get a sense from you then of, like, I have a theory with Putin, which is not that there's no rhyme or reason. It's purely he wants to sow chaos, and not even in Ukraine or Russia, but he wants to sow chaos around the world. We see a lot of these wheat shortages that are starting to pick up in places like Sri Lanka, and a few other developing nations are slowly starting to be watched as potential places to just run out of food resources. At what point do we start to look at things like wheat in the same way that we start to look at oil?
Oh, interesting. I don't know if I have a very clear answer. Yeah, go ahead.
Let me just in my head, the way I look at it is oil at least is energy to for transportation purposes, but wheat and food in general is energy for us living purposes. So that's kind of where I do think those are weirdly connected, but I don't know. Maybe I just smoked too much weed.
Yeah, no, I don't think that's weird at all. I mean, if you just have to think about it like, we have raw material inputs that go into labor, and that allows us to create all the things that we use. And any sort of raw material input that exists is very valuable. And the question is, proportionally, what are the most valuable? And energy for a very long time has been that. And I think that that's why it's been the topic of the discussion. To your point, it's like, well, if wheat is also very valuable and we've never really had a major scarcity of that commodity, and now we do, then will that rise in, it's like geopolitical nature. And ultimately, we're going to see some sort of prioritization of it in some form. I think it's definitely possible, but mind you that like all of these systems that have really made the energy industry such a geopolitical centerpiece in the wheel of our global commodity trade. That took a long time to set up, and there was a lot of agreements that existed for that to occur. So I think a lot of the changes that we'll see with all these other different commodities will probably be affecting price a lot more. And if we do want to get something set up, then taking a step back, and we can get a little geopolitical here. So with if we were to start seeing some form of growth in military expansion, so that's probably the right way to think about it. Yeah. So if we have the energy industry has been implemented as this commodity that is the petrodollar, that's defined in dollars, and that is all predicated upon agreements set up so that the U.S. being a military authority in the world, will trade their military authority to all the governments that want to transact and export these energy commodities in U.S. dollars. So they say, you do your transactions of this major global commodity that everybody needs in U.S. dollars, and we'll support you with our military in some way, shape, or form. So to hit on your question, like, will that trade exist for other commodities? That's kind of what it ultimately would boil down to. And I think the problem for the U.S., at least in this position, is that number one, the U.S. has been kind of contracting their military presence abroad in a lot of different ways, and we've been doing it more in like supplies and resources. But from a more tangible perspective, we've been contracting that significantly, and we see what's happening with like Saudi Arabia and how Saudi Arabia has been denominating the trade in the dollar. They're not getting the same military support that they used to from the U.S., and now they're saying, okay, well, we might consider a petro yuan. And that's, a lot of people are really pushing like that's going to be some highly probable thing, or it's a very, going to be some sort of major catalyst. I'd push back a little bit on that, just because, well, now they have to be trusting, if they're going to make that trade with China, then they have to start trusting military support from China. And China has a horrible reputation. So that's a very scary person to get in bed with. And I don't necessarily think that they would just be, aching to do that. So that's kind of the way that I would think about it for any particular commodity. And, all those systems take a lot of time to set up. But I don't know if that kind of answers the question.
No, it does. I mean, we're just in this truly bonkers moment, I think, in human history. While there have been examples in the past of, I think, global reserve currencies or societies crumbling, we've not, I think, borne witness to a globally connected world where what happens on the other side of the world we could very well see because someone has an iPhone in their pocket and is recording it. And I think that, to me, makes events that are happening in maybe places that I've never even explored, like Sri Lanka, perfect example. Like, I've never set foot in that country, and yet I now know in a different way what's going on versus 50, 100 years ago. Like, you would have never even given thought to the fact that something is going on in Eastern Asia. Like, we just wouldn't be thinking about those things. I wonder how much, and I don't hold it against you because quite frankly, I'm gonna just say it like this: most of you white people don't really know what goes on with my homeland of Iran. But like on the point of bringing up like Saudi Arabia and China starting to align, I thought something very interesting has been going on. I've been pounding this drum since before Putin even went into Ukraine, but that Iran, China, and Russia had been sitting down and having regular meetings. And to me, it was a sign that, hey, these two countries that maybe aren't necessarily under sanctions are sitting down and meeting with the leader of a country that has been under sanctions for just about 50 years, like 40 plus years, asking how have you operated? Like, you haven't died off. Your country is still there. You may not be flourishing, but you've survived through a whole generational cycle. So how? And then lo and behold, here we are. And you have Russia under sanctions. And I still believe China will eventually try to take Taiwan. But secretly during all of this stuff, Iran, Russia, and China have now made a new agreement. And Iran is sending oil to these two countries. And it's the reason why I was kind of bringing up the locking the oil prices and what's happening with oil and wheat. And now me bringing all of this up is to say, how much longer is the petrodollar going to be the global standard, in your opinion, versus a new globally accepted system? I genuinely believe what could very well happen is in the same way in America, like we still measure in inches and feet and pounds, and nowhere else in the world does. We could accidentally fall into a system where we're the only ones in the world using the dollar because we still think it's great and nobody else gives a rat's ass. But again, this is just conspiracy theory Q with a couple tinfoil hats and a few joints.
Yeah, man. Let's get weird right now. So I think that and no, I wouldn't call it a conspiracy theory either. I think that I think the right way of kind of framing that question, rather than like when does a petrodollar fall, is what trends are we seeing in terms of global monetary adoption of which currencies, as well as their assets as well, because they're all kind of interconnected in this fiat system. So I did a write up on this back in April for Bitcoin Magazine, and I walked through what we're seeing in terms of adoption of the dollar at a global level, as well as the other major developed economies that are considered reserve currencies, and then what's happening with a lot of the other small countries. And really the thesis that I ultimately boiled it all down to is what we're witnessing this year, in particular this year, and the sanctions on Russia were a major catalyst to this. And this is probably going to be viewed as the beginning of the structural change in the Bretton Woods system that emerged out of 1971, is a shift in trust at a global level. So in a way to think about that is that, if you think about like a fiat economy, and why people want to be using dollars. Well, let's think about this from the perspective of the functions of money. So you have money as a store of value, as a medium of exchange, and as a unit of account. The medium of exchange unit of account piece is kind of tied together, but we'll start with like store of value. So as a store of value, you want an asset that is stable and very liquid. So if we're looking at this from a fundamentals perspective, put the geopolitics in your head aside. So if you want something that's very stable and liquid, then the US dollar is the best for that purpose at an international level. And there's kind of like three ways that you can kind of boil down a lot of these questions. So I think the best way to look at trust is through the lens of, if you think about the functions of money and what makes something good and fulfill these functions, then you have to see what's kind of ultimately backing the fiat that really makes it good at those functions of money, right? Like, what are the properties of fiat money? And when I think about that, it's really a country's reputation, its security that it provides to the world, and it's ultimately boils down to the remaining properties of the money. So like the two things to consider really are like reputation and security. And the US has a very good reputation. It has a very politically stable environment. People trust its property rights. I mean, what allowed it to become the largest economy in the world in the shortest amount of time in history was the protection of property rights. And I think that that's what's incredibly valuable. And that's what makes the dollar something that people will cling to just at a fundamental level, regardless of the petrodollar and all the geopolitical considerations. So as a store of value, the dollar is very attractive in that respect. And we're starting to see a shift in a lot of those things that are ultimately backing the dollar. So from the reputation perspective, we're getting a lot more political instability than we've had in a very long time. At an international level, we're also starting to, change a lot of our international relationships as well. We're sanctioning other countries. That means the dollar is becoming less liquid, and we're seeing a lot more volatility. So these things are all kind of starting to shift in a more drastic way than they have before, all around like kind of that reputation piece. And then if we go into like the security side of things, well, what really made the dollar a functioning medium of exchange for so long? And it's really because we entrenched it at an international level within this system by trading military security for its adoption. So having that security, having that military security is how we entrench it. We got a big ass military. We said, we're going to protect you guys. We're going to create stability. We're going to be the global police, and you use our money. And we could constantly run a deficit and trade for that. So when we entrenched it kind of as a medium of exchange, that's that security piece. Now, what have we seen in recent years? Well, we're retracting that security piece a bit. So what does that mean? It means that it's less attractive to use the dollar as a medium of exchange. So if we look at the data and we say dollar denominated assets that have existed, foreign exchange reserves, if you look at all the foreign exchange reserves of different countries, the dollar in 2000 or the US in 2000 was 72% of total international reserves. And that's declined all the way to 59% as of 2021. So that's an 11% change, and it's very consistent over 2 decades. So that means we are starting to see a structural decrease in dollar adoption. But what's most interesting about that is that where's that going? Is it all going to the euro? Is it going to the pound? Is it going to any of the other major international currencies that we use? And what you notice is that it's mostly going to a lot of the smaller emerging economy currencies that are being used, or not necessarily emerging, but smaller non-developed, or some of the non-rich countries as well. And so what we're seeing is that the dollar is losing dominance, and we're seeing more dispersion and fragmentation of what people are actually using. And a lot of this kind of goes back to this thesis of like multipolarity that's starting to exist within the world. When they US was like the global hegemon, and we had control, and our military was policing the world, and we maintained control, back in like the 70s and 80s, where at the peak of that. Now we're starting to see that decrease pretty significantly, and we're moving to this world where it's not unipolar, it's multipolar. We're seeing other powers emerge, and they're starting to, organize amongst themselves. And, personally, I think that that's kind of a good thing. Maybe not in the short term, but in the long term. But, so when I think about some of these shifts that we're seeing, that's kind of the primary thing, is that the dollar's losing dominance. But another frame to think about this in is that not only is the US losing dominance, but credit money as a whole is also starting to lose dominance. So we have like 2 primary types of money. We have commodity-based money, and we have credit money. Fiat's all credit. And we've also started to see a major shift in reserves going back towards commodities, particularly gold. And that's particularly occurring within a lot more of these emerging economies that are more removed from our global political system, because they have the least amount of cost in order to adopt them, as well as some of these more the major economies that we're at odds with the US. And so I think that growth that we're seeing in commodity money, where people are losing trust and reputation and security of governments, that's decreasing trust in credit money, and in particular in the US as an international hegemon. And we're starting to see more dispersion in international reserve assets, and we're starting to see more adoption of commodity-based monies. So like if you look at the total amount of global reserves, it's around 16 trillion. And if you look at the amount that's controlled by the smaller non-developed economies, it's about 12.5 trillion of that amount. It's a very significant proportion, and it's growing a lot more towards commodity money. So what's the argument? Well, the argument's more that that's going to benefit gold, and it will benefit gold in a very significant way. But there is, I think, for Bitcoin Bitcoin is going to get a slice of that pie. And the question is, what slice of that pie is it going to get? Now, for us, and we understand Bitcoin, we say, why doesn't he get the whole fucking pie? And it's because there is a lot of other considerations around gold that make it something, because it's more entrenched. Like when I go back to what makes something a good store of value, it's stable and it's liquid. Gold is much more stable and liquid than Bitcoin is right now. So it's going to be superior. If you're a central bank and you say, okay, I legitimately want to put 50% of my reserves into a commodity-based money, you can't just make the bet on Bitcoin out the gate, particularly if you're a larger economy. So you're going to put a lot of that in gold, but Bitcoin's going to get a piece, because Bitcoin's benefits are that, it has a much higher capital appreciation, or expected capital appreciation, than gold would. It is operating on a disintermediated payment network, and the trustless storage of it is also a lot higher. So those three benefits are appealing to banks as well, or central banks and global governments as well. So if you look at those three benefits and you'd say, okay, Bitcoin's definitely going to get a slice of this pie, and how big is that going to be? And that's the major speculation, but that's the primary shift that I think we're seeing. So the dollar's not going away anytime soon. It's going to exist for quite some time, but we are witnessing a gradual decrease. We are starting to see a lot more fragmentation. A lot of that's going into commodity money, and Bitcoin, I think, is going to get a pretty big chunk of that. And I think we're going to actually see a lot more gradual adoption over time, which I think is so important. I think if we do have some sort of major catalyst that spawns chaos in the world, and Bitcoin's a part of that, that's probably what we don't want. What we want is gradual adoption with countries where people don't really give a shit. And eventually it'll get to a point where when that catalyst does hit, it's just going to be too far to turn back.
I think there's a lot to unpack there, and I want to start, I think, first at the idea of protection. I think the best example in recent memory is the way the U.S. handled Afghanistan, and in particular the exit, and how quickly all of the military supplies that were provided, and the training and the money that was given to this country was very quickly, essentially, like, went into the hands of the side we were fighting against, and not necessarily saying like it was just handed to them, but more through the lens of they got their hands on it because we didn't do a good enough job. Nor have we really done a good job. If you continue to look back and back as each decade of which war we fought and what region, you can go as far back, arguably to Korea, to where we haven't really, I think, fulfilled the promise of U.S. security, safety, and supremacy. And I'm wondering if something like, oh my God, China stepped in during the Russia-Ukraine war and they saved Ukraine. Is China the new global, like, power, validating their deal with Saudi Arabia, and then other countries start to go to them and exit? Like, what in your mind is the type of event that would take the U.S. out of that stature that it strangely still holds today, despite its track record, in my opinion, signaling it should no longer?
So yeah, I think you're spot on with the idea that we're going to see China kind of emerge as a competing power, and kind of to my prior point, I'm not expecting that we're going to see another dominant power globally emerge, but we're going to see division, and more competing powers in the U.S. will probably start backing off a bit. So on that point, China has and this is a lot of my geopolitical knowledge is referenced from Marco Papich, who wrote the book Geopolitical Alpha. For people that are on the financial side of things that want to get a crash course in geopolitics, I highly, highly recommend it. I got to know one of his ex-colleagues, Jacob Shapiro, as well, who's a really bright guy on the geopolitical spectrum, and he works at the strategic funds, and I think you should look up what he's writing as well. But from what I've read from these guys, like, the major issue with China, China has this big, with their growth into like the developed economy world, one of the big issues you have when you start to get this rapidly expanding middle class is the middle income trap. So that's like GDP per capita that ranges between about 1,000 to 12,000. And if you can't break out of that middle income trap, then you typically start to see, and China's, acutely aware of this, that is typically the end of communist regimes, and they have to get the wealth of their middle class above that amount. So I think the key issue when, people are asking, will China invade Taiwan? And I think another thing to look out for too is when like these geopolitical topics come up, and that guy Marco Papich references this, it's kind of like the primary thesis of his book, is that people like to talk about geopolitics from the perspective of preferences. And they'll say like, well, China wants to dominate the world. China wants this, or Russia wants this. They're going to do this because they want it. And it's not just about what they want, it's about what they're constrained by. So the question is to say, okay, well, what do they want, but what are they constrained by? And they're ultimately going to go for whatever they can that, considering what they're constrained by. And China's constrained kind of by this middle income trap, and they're reaching the peak of their debt cycle right now. So the economy is not necessarily in a position to where wealth is going to be getting accrued much more rapidly. And they're a bit weaker. And the question is, will China invade Taiwan? And I was, his name's escaping me right now. Kyle Bass. Kyle Bass responded to one of my things on Twitter when I was kind of like bringing up this point, and this was kind of my response to it. But he had this thread about Chinese aggression and what he thinks they're planning on doing. My response is that, I think that this will probably be, if we have to go into some sort of aggressive situation with China, that'll probably be the next major catalyst for when, the Federal Reserve's like, we need to start printing money a lot more again. It's going to be if we like go to war with China in some sort of form. And then Kyle was just like, not necessarily, economic sanctions are probably our best route. And we have quite a bit of influence over that with economic sanctions. And, that's absolutely true. But I think that the issue is that, if we do economically sanction China in ways that are going to go after their middle class, and that's our pain point, that's how we hit them hard, then they're going to be really forced. They're going to be between a hard place and a rock, and they may become aggressors over that. And it may not even be they're going after Taiwan, but they're going to probably become aggressive because they're going to start running out of options. And I think that will be one of the major issues that really brings China out. And then the question becomes, okay, so if we do get into that, that's when I think real war might start. And it'll probably be over Taiwan. And I'm betting a bit more that they do go into Taiwan for those reasons. But I think it's going to start with, very heavy economic sanctions. And once we get to that point, I think the question of, how that all ultimately pans out is, I think the U.S. is perhaps, particularly if we have these alternative commodities and emerging markets that are gaining strength and value, it's going to be so much more costly for the U.S. to go to war. If you consider, our economic position going into World War II and World War I, we were much more stronger and we had a lot more leverage back then. Now we are entrenched as a global monetary reserve, so we can do that. But I mean, that's effectively what happened to England after World War I, and they ultimately lost their monetary authority over all the burden that they had to bear from printing all the money they did to finance that war to the U.S. So I mean, it creates a situation that's ripe for if we go into like some sort of major global war and we're in this weak economic position that we're in, we could become what England was in World War I again. And so that ultimately might mean that they might back off at a certain point, and we might start to see that multipolarity exist and China start to emerge more heavily and capture Taiwan. And, domestic industries in the West might have to emerge that are, that are a lot more labor intensive that we've typically outsourced to Eastern economies, which, will have its benefits and its costs. I think that's inflationary, but it also means the working class might benefit domestically as well. But there's a million things you could talk about around all that.
I mean, I'm down to go down that rabbit hole. I'm realizing we only have like maybe 30 minutes left, but I will let you pick. We can either keep going down this.
Shift it. Let's talk about something else.
All right. I want to talk now about just, the goings on in the U.S. government and the idiots in power. We've seen Janet Yellen try to walk back what she said about inflation as though nobody in the Bitcoin universe was saying, hey, maybe printing trillions upon trillions upon trillions of dollars will have a negative effect on, just the money supply. But no one wanted to listen to us. They wanted to listen to themselves. And here we are. We're also seeing our latest White House press secretary try to give us, honestly, I applaud the effort to try and spin the garbage that we have and argue and say the economy is better than ever. Like, you must not live in this country. You must have never left your home in the last, I don't know, 2 years. But newsflash, shit is bad. We have inflation numbers coming out tomorrow. We have a new FOMC meeting next week. We have Joe Biden hanging out with Jimmy Fallon, I think it was, or whatever late night show he goes on now. First, I want to ask who do you hold most responsible for the current climate of the American economy?
Whoa. Whew. I'm thinking about how to break that down. It's I think it's hard to answer that in such a pointed way.
No. We don't need to be thoughtful right now. You could literally just be like, it's Nancy's fault. My personal favorite is Lindsey Graham. I fucking hate that man.
I mean, look, you gotta hold Jerome over the fire. I think that it's it was very obvious that they were overshooting their stimulus, and I think it's, and to your point, we weren't saying that, that was said in hindsight, or as well as it was said, before the fact. From assuming that their goals are reasonable goals, their goals of price stability and economic stability. I think that the Fed's lost just like a ton of credibility, and people are starting to understand the narrative that you can't just print money endlessly, and like much more broader sense, and it's becoming a political topic, which I think is so important just because it hasn't been for so long. And to people in our world it is, but when you go talk to like your average Joe who's watching Fox or CNN and every night, like it wasn't popping up as much for them. So I think I think what's important kind of around some of these discussions and like like the Bitcoin community is you don't want to be right about things for the wrong reasons, and you want to make sure that you think about it in the right way. And there a lot of these things are tied together, but I think the whole like transitory inflation argument, and then the people who are like on the other side and they were the deflationists. I think that the deflationists had they had a strong argument. They still do have a strong argument. I think eventually it's going to be borne out in some form in a short-term way. I don't think it's going to be a persistent form of deflation, at least not within the next 20 years. But I think it'll be a short-term form of deflation. And I think that a lot of the inflationists were kind of right about this because the way that you can think about, I like to think about inflation. It's kind of like you're skipping a rock across the economy. We have some sort of change, and then we have the first hit, and it bounces, and there's a bunch of ripple effects that come from that. And then we have the second hit, and those ripple effects come, and then the ripple effects start to run into each other. And it's a really complicated thing to make arguments for. And I think a lot of people will make these arguments based on one understanding of the problem. But I think there's like three primary buckets that you can think about inflation from. First thing, supply and demand. And the supply and demand of any price of any good around the world at any given point in time, there's some sort of theoretical average of what that price level is. CPI is an attempt to measure that. But we have the supply and demand piece that exists, and then structural changes within the global economy, and those typically occur for geopolitical reasons, and things like lockdowns and trade wars and all of that, or major cycles that we go through with business and economic cycles. Those will impact that, and there's a lot of arguments to be made for what can happen at that level and how that'll ultimately impact the overall level of prices. That gets really complicated, and so I think the deflationists were making their arguments not really considering that what they did consider is that this particular trade issue that we were starting to see with supply shortages was going to resolve itself quickly, and they ended up being wrong about that for a variety of different reasons. But what they were primarily focusing a lot of their arguments around was that when we quote unquote print money, is that something that expands money supply? And what a lot of people don't understand is that, it's not necessarily, when the Fed is buying an asset, it doesn't necessarily put money into the economy. And there's what happened during the pandemic was highly inflationary. This is where I kind of, lost, um, I lost sight of some of the arguments that the deflationists were making, because with the amount of fiscal deficit spending that we had, where we had very direct helicopter money going into the economy, then that's money into circulation. I mean, you can make it, it's not QE, it's something very different. And that's highly inflationary. And we're seeing inflation from that. Now, if we look at it from monetary policy from the perspective of quantitative easing, the question becomes like, okay, we buy assets directly from banks within the economy. And what we do is banks kind of have two things. They can either have something as a reserve, or something that's sitting on their balance sheet is like, is a deposit or a loan. So like they're, or sorry, is a loan, not deposit. And so when we do QE, we go to the banks and we say, okay, I'm the Fed. I'm going to create money on my computer, and I'm going to buy some of those assets that are things that aren't considered reserves. And we're going to convert them. When we buy them from you, we're effectively converting them into reserves. So like the deflationists will argue, like, quantitative easing is just a bank recapitalization. We're changing the capital of the balance sheet of the banks. And when they recapitalize it as something with a reserve, they now increase the amount of firepower that bank has with their ability to lend more. But the problem is we kind of stressed that. So because we've lent so much within the system, because interest rates have been so low for so long, and we've had all this monetary stimulus, there comes a point where it doesn't really matter if you give them more firepower. They don't have a target to shoot at. So they're just like, look, we could loan. Look at all the absurd companies that are getting money right now, or all these absurd mortgages that are getting issued when stimulus comes the way that it does. And eventually, banks kind of hit a stopping point. They're just like, okay, there's not much more else we can do here, and then the money doesn't get circulated into the economy. And like their argument is kind of based around that. So when the Fed starts to shift their policy and we start to increase interest rates and we start to make it debt less, we start to decrease the supply of debt. Well, first and foremost, before we really start to see a contraction in like credit, we're going to have to wait for, so this gets in kind of like to the repo facility. And a good way of thinking about this is, the repo, when people look at like that reverse repo chart where like it just like spikes all of a sudden in 2021, and now it's at like $2 trillion balance, and everybody's like, this is bad, where did this come from? Really all it means is that banks don't have anywhere to loan, so they start to just give the money back to the Fed, and the Fed pays them a very small interest rate on it. So that balance of 2 trillion that's sitting in the repo facility, you can think about that as like, here's the amount of over QE that the Fed pushed in the economy, where banks just got all this money. Like, what the hell do we do with this? We can't lend it to anybody. We're just going to give it back to you guys. So with all this quantitative tightening that we're going to start doing, and with the rising interest rates, we have like $2 trillion of repo facility that these banks are going to have to loan out, and they're going to have to decrease that account before we really start to see any significant change from it. So my point being, in like summary, is that the Fed has got a lot of leeway here, because they push so much stimulus with how much they can actually contract. And like people are like, oh, well, equity markets are declining and things like that. But if you look at credit markets, like they actually got a lot of leeway. There's also an interest rate argument for it too, but I've been rambling again. So I'll tune it down here. But yeah, that's when you think about this. I'll bring it back to the inflation piece that we were talking about. So those are how the expansion and contraction of the money supply exists. And if we do see expansion in the money supply and drastic increases, then that is also inflationary. And right now, we're just not in an environment that's very fertile for it, because credit's already just been expanded so much, and our money is credit. So if you can't expand credit that much, then you can't expand money that much. And then the last kind of bucket that I was talking about, I said supply and demand, and then I said how we are our measuring stick, which is the money supply, and then changes in that. And then we also have changes in the way that we like measure all that. That's like your CPI. That's a scam. But in argument in favor of the CPI is that it's kind of it's a task that I don't think anybody can really effectively do. It's a theoretical concept that they're trying to measure. But that being said, every sort of change that they make to it is always biased in favor of, the government. So that tells you that they're not really acting in an intellectually honest way with how they're trying to attempt that measurement. But the CPI is definitely a scam.
Well, I think you've already answered the question that I was going to ask, but of all of the things that are going on right now that the government talks to us about, what's the thing that pisses you off the most? So I guess I'll just ask, CPI number comes out tomorrow. What is your expectation, and do you think they will give another adjustment on the calculation to make it fit what they want?
The most of the adjustments occurred back in the 90s, 80s and 90s. But I think that they will. The key thing I want to read into before tomorrow is what's going on with inventories, because I was hearing conflicting things. This morning I was reading something that what's her face, Kathy Wood was saying, like, inventories at companies are actually they're starting to accumulate significantly right now, and I was reading a bunch of stuff contrary to that. So I want to get to the bottom of that. I don't know if that's probably not going to impact this current CPI number, but it might in the next few months. I'm expecting it to stay kind of in a similar range to where it's at right now. I mean, a lot of the changes probably won't be, it's a delayed indicator, which most central banking policy is all kind of based on information from 3 or 4 months ago. And then it doesn't appear in the CPI for another 3 more months after that, or depending, on the real estate piece, even a lot longer because it's a smoothed average. So I kind of want to look into the inventory piece. I think that that's probably something really important for people to look into. But so I guess until I look into that, I don't really know, but I'm expecting it to be kind of flat in these numbers.
Why, or what's leading you to believe that these numbers are going to come flat? Like, what are you seeing out in the world that's like, oh, that should lead to this? Or is this just, your gut is probably a lot stronger than my gut at judging these type of things.
Well, it's just more like when you get into the details of how it's calculated, it's like, okay, we've seen these rising prices. We finally had it flatten out over the last reading. So, or the April reading. So when we looked at March 8.3, we look at April 8.1, when we're now going to be getting May on Friday. The question is okay, well, what significant changes have occurred that are going to make prices come down in this next reading? And I can't think of anything that was recent enough to impact this next reading. Now, we've had changes that have occurred and impacted asset values pretty significantly, and prices continue to rise from like an energy level. But I think that, none of that's probably going to be hitting this current reading. I'd expect it to be I'd expect 8.1 to 8.3 range, maybe 7.9-ish, somewhere in there. But, I'm not an expert on these things. I've done a little bit of work into reading into some of it, and I have a little bit of an idea. But yeah, that's probably what I'd say. When you think about the CPI, it's based on delayed information, and it's also calculating it in a delayed way as well. So it kind of lags a lot of things.
I don't give a shit what they say. Gas is still more expensive than it was yesterday. That's my barometer for inflation right now. Is the second gas at Costco is more than $6 a gallon. Like, shit's gonna get weird here in LA. Like, there are places in Los Angeles that it's pressing almost $10 to a point where, like, we're having conversations in my household, at least, of like, do you need to drive there? Do you need to drive there?
Wait, that is fucking crazy. I just want to be clear. There are places where you go to buy gas where it's over $10, or it's about $10 a gallon.
There is nowhere that I have stepped foot in. However, there are places that have above $9 a gallon gas in Los Angeles, specifically in downtown Los Angeles. So not the most ideal place. But
it doesn't matter. You should be able to get gas for cheaper than that.
Well, so
rather, it should never be that expensive in my mind.
I got into this conversation with like my girlfriend and a few friends because she works in downtown and a few other of our friends work in downtown, and it's like that picture went viral of, oh, this gas station has more than $9 a gallon. Oh, it's over 950. Like it's creeping up there and very fast. And if you actually look at a map, it's like in this part of downtown, there is only 2 other gas stations, and downtown Los Angeles is not a place anyone, even people who live in Los Angeles, like we don't go to downtown unless you work there or like you're going to a Lakers game. No one goes to Clippers games. Like maybe a couple people go to LAFC games, but like no, like that's it. It's all you're doing as far as like going to downtown, maybe a music show here or there. But like downtown is the worst designed part of Los Angeles with like these random one-way streets that like one goes this direction and then you think the next block goes the opposite direction. It's like, actually, no, the next block then is like a 2-way and then the block after that doesn't.
You're saying they're designed specifically to force you to waste gas. This is all part of the nefarious plan.
No. It's not about, well, I'll put my tinfoil hat on after I finish this, but like this gas station is like so inconveniently located in comparison to the other ones that like if this is the only gas station you see in downtown, you have to go to that gas station. Like if you are out of gas in this part of downtown, you're fucked. You're not going to make it to the other gas station. So you get royally screwed in that regard. This was explained to me when I was in high school. I have since found the documents. You could look this up online, but I believe it was in the 70s or 80s. Essentially, the car lobbyists lobbied the state of California and convinced specifically the city of Los Angeles, instead of ramping up development of public transportation, specifically like a railway system, to actually stop building that and to focus more on building out what they pitched as the world's super highway. And it was supposed to create this system that had like 6 different freeways going to downtown and 5 different freeways going to Santa Monica and 20 different freeways to get you to all the different parts of the valley and whatnot. And the car lobbyists put money towards this. They put less than 10% towards this. Part of the law that got passed was it put a moratorium and they stopped outright development of public transportation rails in the city of Los Angeles for over 30 years. And so the car companies hamstrung us, left us with the bill. The project is incomplete. Like right now, there are 3 freeways that get you to downtown. That's it. 110, the 10, and the 5. The other, I guess you could argue the 101 kind of cuts through, and that's it. There were supposed to be 3 more fucking freeways. So I'm at this point just like rambling about how terrible Los Angeles is because I want to leave.
Yeah, dude, it sounds like LA kind of sucks.
So yeah, anyone want to move here?
Yeah, I was out there not too long. Well, I went out there for McCormack's podcast back in February, and then I came back out because I went to Coachella in April.
How's Coachella?
Yeah, man, the traffic. Oh, it was a blast, man. It was groovy. I nearly cried during Billie Eilish.
Love that for you. I love that journey.
Yeah.
Was that your first Coachella?
Time. It was, yeah. I've never I went to a few festivals in high school, but I was never a huge festival guy. One of my good buddies, he's starting this startup Fanimal.com, and it's effectively like competing with Ticketmaster and StubHub. They got financing from Pear, which is like the same VC that did DoorDash. They were their initial lead, and but so he's a big tickets guy, and he's like, dude, you got to come out to Coachella. I was like, all right, man, let's send it. I'm trying to convince him to make his startup the first ticketing platform to adopt Bitcoin.
Bitcoin NFTs on that platform would work very well. Just my 2 cents.
Yeah.
I do think there's a
once he's ready for it. I want to talk to somebody because I don't have enough of a knowledge around some of this stuff, but the accounting side of things for like small businesses and what would be the best platform for him to adopt if he's going to start doing that, because that's his big hang up is the accounting piece of all of it and whether or not it jives with their current system.
Well, we'll talk offline about this, but there's definitely a lot of resources and people we can link you guys up with to make that a reality. Eric, it makes me sad that our time is slowly coming to an end.
You don't want to hear me ramble any longer?
No, I do. Dude, I genuinely would. Honestly, one of these days we're just gonna be like both Pete or all 3 of us, Pete, Chris, and I are just gonna be sick, and I'm just gonna call you and be like, "Yo, I need you to just go 2 hours straight, just 2 hours straight, of just a monologue Go nuts. Where can, well, actually, before that, I want to give you the opportunity to pretend that you are either President of the United States or the head of the Federal Reserve. You could take your pick, and what is the first thing you do in that new position?
Ooh, dude, head of Federal Reserve. I'd throw a massive party and burn it down. Yeah.
Yeah, I better be invited to that party.
That would be a rager.
Like, it's funny because so I used to go to school in DC, and like we used to walk by the like 1600 Penn was like not too far. For those who don't know, 1600 Penn is the address for the White House, but like right next to it, you also have like the vice president's building. This building is fucking massive. And my fraternity brothers and I, we used to literally like walk by sometimes like while we were smoking a joint or just like whatever, look at it and be like, yo, how sick would it be if like our fraternity like had that house? Like,
Yeah.
that would be the wing for the seniors and the pledges would be there. We just fucking rage. But that's to say, like, I've already thought this out. So keep me in the loop of when you become the head of the Federal Reserve and want to do this party. I have some great buildings for us to tear down in that city.
Hell yeah, man. Yeah.
Eric, for our audience who was not before, how can they stay up to date with what you're doing, what you're writing, and who you're trolling?
Yeah, just find me on Twitter. I try to not be as much of a troll. I try to crack some jokes every now and then though. Follow me at ERICYAKES. My book, you can get it on Amazon. It's called The Seventh Property. And I got a website. I do a newsletter thing, but I don't like, it's just like I write stuff every few months or so, and I'll kind of like ship it out to people and just say, whatever's on my mind. But it's kind of an infrequent thing. But that's about all I got to shill.
Love it. If you guys aren't already,
Ooh,
give
I'll
Eric
show
a
this
follow.
too. If you guys follow BitMegs on Twitter, see this Lightning Network t-shirt I got? I love this thing. I got it at the last Bitcoin Day conference, made by BitMegs. I think it's BitMegs on Twitter, but maybe you guys can put in the link and I'll send it to you. But she's kind of the queen of Bitcoin merch.
Oh shit, Raymond Chen, you heard that? She's coming for your job. That's a great segue, Chris. If you want to plug Bitcoin Day Charlotte this weekend.
Yeah, no, I'm going to be giving a talk at Bitcoin Day Charlotte. It's this Saturday in Charlotte, North Carolina. I believe there's still tickets left. You can go to bitcoinday.io. But yeah, really looking forward to it. Eric, what was your experience like at Bitcoin Day? Real quick, which one were you at?
Oh, I've been to, I kind of like got started with those guys, and the first one was back in Omaha in the fall of last year. So I did that one. I did KC. I did Sioux Falls, South Dakota, Oklahoma City, and then they're doing Denver in July. So that'll be big for me because that's where I'm out of.
Bummer we couldn't meet up in Charlotte, but maybe next time.
I know, man. Tell Ed, be like, why didn't you invite Eric to Charlotte? He doesn't like to bring me to the East Coast. Kind of pisses me off, man.
You're too close to DC at that point.
Yeah.
That's really all it is. Good to know that you're in Denver, because next time I'm there, I'm going to hit you up.
Yeah, hit me up, man.
Guys, we're going to cut to a commercial break. We'll be breaking down some news and notes with P and Chris and myself, and then we'll have Jimmy Song join us after that for a Bitcoin Songsheet. It's Thursday. Cut me a break, guys. All right, commercial break, and we'll be back.
is up, guys? We are back. Thank you for sticking around through that commercial break. And just a quick reminder, as you saw, Bitcoin 2023 tickets are on sale. Lock in your tickets now before prices go up next week. That's it. That's the bit. We'll be out of jobs if you don't buy tickets. So do with that information as you see fit. But it's time for some news and notes right now. First bit of news that I wanted to kind of break down and discuss. Where was it? Oh my God. Oh, this Joe Biden stuff. Like, dude is, he is already annoyed that I'm going down this path, but
I'll allow it. But watch yourself, counselor.
Look, he's going to finish his term. Like, just let's swallow that pill and just take it as it is. I don't think he was ever going to run for a second term to begin with. I'm curious to see, like, I always kind of believed that what was going to happen was he was going to step down before his term ended and Kamala was going to become our president. They were going to foist that on us. I'm wondering.
I mean, he basically said as much, right? When he was running, he was like, I mean, look, I'm an old ass man. I'm going to die tomorrow.
I think his exact words were, I only want to be president for 2.5 years, and then I'm going to let this bitch run the show after that. Like,
you know what? You're right. I'm sorry. I stand corrected.
Exact quote. Look, like, I had this theory before the election that if Donald Trump had won, his supporters would have, this is going to be a lame way to say it would have been much more supportive of him and whatever he did than if Biden won and what his supporters would have done. And I feel like we've seen that play out. Biden has managed to piss everybody off at this point. I believe, if I'm not mistaken, like his, what's the number? His approval rating is at its lowest level, and it might be actually like
the lowest historical level for a president ever. I might be making that up, but I want to be hyperbolic here because
I'm not going to lie, that sounds pretty hyperbolic.
I'll just admit it from this lens of, like, I definitely didn't feel like Donald Trump was a president type. I definitely come from that group of people who was like, I want my president to, like, I don't know, not be a jackass, know what he's saying, like, you know, have that charisma to, like, hold a room. People want to listen and pay attention to you. The truth is, Biden's not that either. And, like, I'm really fucking sick of it. And yeah, so that's to say,
wait, where are we going with this, Q?
How do we get Joe Biden to be a Bitcoiner before 2024?
Why would we want him to be a Bitcoiner?
Because eventually everyone's going to be a Bitcoiner.
All right, fair enough. I mean, I guess, you know, having the leader of the free world. First of all, I don't think it's possible. He has, like, the reality is he has very little life left in him if he's not already dead already. I maintain he's an animatronic corpse created by the lizard people. You know, he's stuffed with butter and it's just sort of like a skin bag, a meat puppet. But let's put the evidence that supports that claim aside for a moment. The evidence being, I thought of it just now as we were talking, and it must be true. I don't think he's interested in Bitcoin because his time horizon, or no, there's many, many reasons, but one of them, I think it would be very hard to convince him because his time horizon is so short. Like, by definition, he's kind of a, you know, high time preference bitch. Now, ideally, he'd be thinking about it in terms of, like, the longevity of the country and future generations and all that stuff. But in terms of his own self-interests, which we all have our own self-interests, I just don't see it happening. He's too steeped in the existing system. I think that, though I agree that everybody will eventually come to Bitcoin because the incentives are strong enough, I think that he doesn't have enough time left on this earth. This earth. Yeah. EARF to be convinced.
Politicians are funny. I was just thinking about this. They are very high time preference bitches, as Pete refers to them as.
The technical term.
But in a weird way, they're also low time preference. I mean, he's been in, how long has he been in like Senate or Congress? He's been doing that for what, 40 plus years, 50 years. Correct me if I'm wrong, but like he's never had like a real job outside of like being a government official. So in a weird way, yeah, they're always like on 2-year or 4-year cycles or whatever the election cycle is, which is very short. But like he's built a career out of having high time preference long term. You know what I mean? Like in a weird way, you get where I'm going with this?
I think by definition, a long-term high time preference would be a low time preference.
No, exactly. So it's like they're always like trying to win re-election, but in the process,
Yeah, I mean that's what it comes down to.
Yeah.
I mean, I see what you're saying in terms of like the long-term trajectory, but at the end of the day, everybody's focused on the next election cycle. Like as soon as you get elected, it's like, all right, what am I doing to secure my throne? You know,
Dude, it goes a little deeper. I mean, like, take this with a grain of salt because I know that I'm going to say these 3 letters and like half, if not a majority of the people watching and listening are going to like cringe. But when AOC got elected into office, like she was very vocal about, I literally walked into Congress and the first day they asked me to jump on the phones to help a different congressperson raise money for their congressional race. I'm like, wait a minute, but this is day one. So like that's the system in place. It's not about what did you do. It's about how few people did I piss off so that I can stay in power. And it just goes back to the idea of like, you need a shot clock. There's I forgot who he was interviewing, but I think it was Neil deGrasse Tyson, who essentially said that he was asked the question of like, if you could live forever, like knew that you would eventually die, like which would you choose and why? And his argument was, well, I would choose to eventually die, because having that end, that finality gives much more meaning and purpose to what you are doing. You have an incentive to actually work in the today, in the present, versus putting it off endlessly because you just assume, well, I'm going to live forever so I can just get to that one day. And that's in essence what we see with politicians. It's like, I don't have to solve this issue because I can just get to that one day. And mind you, like I'm using the lens of the way I was taught history to kind of explain this, but I remember one of the biggest things that, you know, historically politicians in this country had punted for generation after generation was the discussion over like African American people's rights. And the way I was at least taught was when the Declaration of Independence was being signed and when the founding fathers were trying to determine what rights they wanted to fight for, an original draft had all men, and it included, I think, an umbrella term to allow blacks and whites to essentially operate. And then, of course, the southern states with their plantations pushed back. And ultimately, it was Thomas Jefferson who spoke up and said, this may not be a fight for our generation. This may need to be a fight for a future generation to take up, but we need to prioritize what we need to prioritize right now for our own freedoms. I'm paraphrasing. I'm being told third, fourth hand through history books and history teachers, so heavy dose and grain of salt. But historically speaking, we have done this repeatedly with different issues. Look at Alexander Hamilton and the way the banking systems were formed. Look at, you know, the way we dealt with Jim Crow laws, the way we've dealt with the housing crisis, the way we've dealt with so many things. We just punt things off. We don't deal with them in the present. Oh, people are out of work. People aren't working. The economy's tumbling. Let's just write them a check. Who cares what's going to happen next year? Like, we'll fix it this year, though, right? So I think to everyone's point that we've all made, like this high time preference bullshit that we see out of DC is just rooted around the fact that they don't have a shot clock. They can just hang out there, dick around for a year. Oh shit, next year I'm running for re-election. Okay, let me get my name on this bill or that bill. And then we move on. We've been talking way too much about DC, so unless either of you guys wanted to chime in. Cool.
No,
So,
I want to...
go. No. Your story next.
There's a story that I'm super excited about, which is the Jack Dorsey and Jay-Z announcement around Bitcoin Academy in Brooklyn. It sounds so fucking dope. Specifically, the headline is the Bitcoin Academy will help those in financial hardship with free courses, devices, and data plans for residents of Marcy House in Brooklyn, New York. Bullet points are, this is all, I'm reading this verbatim, from the Bitcoin Magazine article. If you go to bitcoinmagazine.com, you can see the trending articles, the headlines right at the top, and you can click on it. It's very short. Essentially, bullet points are Jack Dorsey and Jay-Z have announced this Bitcoin Academy. The classes are going to be completely free to residents, and they're going to give out data plans and devices, which is fucking amazing. And then they're also going to have a program that focuses on children ages 5 to 17, which will also be free. So this is all focused on education. The pull quote is, this isn't just about Bitcoin, it's about long-term thinking, local economies, and self-confidence. This is from Dorsey. I'm super bullish on this. I think it's really, really amazing. I'll be very curious to learn more about it as the story develops and figure out like what are they going to be covering exactly? How much Bitcoin focused content versus just broader financial education? Who's building out the educational materials? That's going to be really interesting to learn, but very fucking cool.
I love it. I will say there are some very interesting like Jack Dorsey being one of them. Lamar Wilson is involved with this project as well. So we're hoping potentially to have maybe someone from, I'm in Lamar's DMs right now asking, can he come next week to maybe like break this down further, and who knows who else he can tap to join him. But I think this is exciting. Like Jack's statement in particular, I think sends a very important message, which while Bitcoin is viewed as this lifeline to many people outside of the country, those who have not benefited from the US dollar's supremacy, you also can see within the US, there are subsets of people who have not benefited from the US dollar or the systems in place.
What?
And I know, right? Crazy to think about. 3 privileged guys talking about it who've never really had to deal with these type of issues before. Mind is blown. But I think it's important because like the conversation I had 2 days ago with one of my like very, very close friends, and the conversation was like, right, but like who uses Bitcoin? Like I don't get it. I'm like, right, because we don't need to worry about that. Like for better or worse, like we've grown up in a system where I could just go to the bathroom and if I needed to, I could just drink that fucking water. Like I could. That's not the case for everyone in the world. Or you know what? Thankfully, I have a job or I have a brain or I have access enough to places where I can go, put my time towards making money, and then in turn using that money. But not everyone has those benefits. And I think highlighting it domestically can be a huge catalyst, not only to these underserved communities, but to other people who may not necessarily see it, who don't necessarily, it doesn't click for them because they're not seeing Bitcoin in front of their eyes, to literally see like a community of people now starting to use Bitcoin, now starting to benefit from the use case of Bitcoin, now starting to grow their community. This is a huge step forward for Bitcoin in the US.
I mean, I'm pretty bullish on this, but I mean, I don't know if it's a massive step forward. I think it's really cool because again, what it signals. But I'm excited to see what happens. Dorsey has proven himself a strong advocate for the Bitcoin space.
Look, guys, you have to understand and respect. Like, I do have a soft voice, and it's due in large part because if I talk too loudly, my dad will come in here and beat me with a stick. So bear with the soft voice, guys.
Child abuse is real. Adult child abuse. Adult man child abuse.
I was going to say, 30-year-old man abuse.
He's like, you choose the switch. All right.
Moving on now.
I want to talk about...
This
Go cover it.
I want to do one really quickly. We don't need to spend a ton of time.
Wait, let's Rochambeau. Let's rock, paper, scissors. All right, you got to hold your hand up so we can see it. Ready? Rochambeau.
Bow.
All right.
Scissor.
Rochambeau.
Rock. All right.
All right, one more.
Ready?
Rochambeau.
Bow.
I win. You are cheating. All right, go
How
for
am I
it.
cheating?
You're so delayed. You definitely
so
cheated, but
delayed.
Q,
Anyway,
go
go
first.
for it. Fuck you, Q. I'll never forget this moment. When you fucked me. I thought we were brothers.
I feel like I'm playing a game with my little brother, and I just wanted. He's like, "You cheated."
Yeah.
That's literally what just happened. The irony is I'm in my little brother's room and he's on his way home right now.
He's
Anyways,
gonna beat you with that switch.
so there are reports now coming out from Terra employees to the SEC that Do Kwon was in fact pocketing money and liquidating his position leading up to the dump off, almost as if he knew what was going to happen.
No.
Almost. Like he convinced a bunch of people to put their money in and he took it out of the account and was like, I'll replace it later, right? You know who else did that? Bernie
Satan.
fucking Madoff.
Oh yeah, there you go. That guy.
Well, Satan too. But Satan does it in like weird ways.
Yeah, that I mean,
Like we're beating it down. Like I'm literally kicking Do Kwon while he's down on the ground.
no, he
and I
deserves
won't
to be
stop.
he deserves to be kicked until he can be kicked no longer because he's just a smooth paced. Yeah, no, here's my reaction to that. I think I'm just surprised that anyone expects any different. Like I'm surprised that people are surprised. And we tend to demonize individuals, and we should. When people fuck other people over, we should castigate them and, throw them beyond the pale. But we shouldn't be surprised. Like, the problem here is that humans are humans, and when you use systems that have fucked up incentives, the people in power will eventually abuse those incentives. So I feel like our reaction should not be to grab our pitchforks and go after Do Kwon. Well, it should be, but that's not going to solve any problem. When people are like, he should be persecuted. Like, again, as you said, this is exactly what Bernie Madoff did. Like, we're going to see this again. And countless people before him, the vast majority of which we never fucking hear about. So getting upset about it, my reaction is like, how could people be so goddamn naive? Like, of course this was going to happen. You have to use systems that are decentralized, where it is not possible for people to take advantage of others in this way. Otherwise, it will 100% happen every fucking time. Stop being surprised when you're using systems, whether it's financial systems or other systems where there's, bullshit involved, or there's the capacity for bullshit. You're going to get fucked eventually.
I just want to brag about this, and then P, we can do your next news story. But yesterday, Pomp was tweeting some stuff about like Bitcoin is the best and yada yada yada, and I took it upon myself to remind him. Didn't you shill Luna to the same people who are liking this post right now? You cocksucker. Moving on to the next story.
It's exactly the same thing, right? Like, Pomp is always going to pomp. Like, he'll do anything for money.
Pomp and domp.
That's his prerogative, and but I think we just need to understand what people that people are always going to do what their incentives drive them to do. The solution is not to think that punishing a specific individual, though we should, that's going to solve the problem. It's not. You got to use better systems. All right. Next story. This is an article that was published. I don't know if we talked about this yesterday, actually, but Edge is releasing a confidential Bitcoin MasterCard, which I think is super interesting. So this is a kind of bridge between the traditional financial system and Bitcoin. According to the article that was published a day ago by Sean on BitcoinMagazine.com, there will be no KYC required. You'll be able to use this with Apple Wallet, and basically you will, I think it sounds like you're going to fund the card, but it will be instant, and then it has a daily load limit of $1,000. There's no credit checks necessary through any third-party clients to get access. That's pretty fucking cool. I mean, Fold is great, but definitely requires a ton of KYC. I want to get one of these. Test it out.
Hey, I guess my question is, how are you loading the card with Bitcoin itself, or with do you wire cash to them, or I guess do they get the information on you through your bank when you route the money?
Yeah, very unclear. Let's see. Yeah, I'd be very curious to know. I kind of assumed in my head that it's being held in Bitcoin, but that actually seems very fucking unlikely. So plus
Or
then
do
you're
we have?
trusting somebody else with your keys or with your your Bitcoin. So um, I'm not actually like excited about this in the sense that it's going to like be this revolutionary thing. I just think it's an interesting progression towards Bitcoin being more and more accessible through traditional financial systems rather than something that you know you have to do 3 backflips to get involved with, which by the way is not true at all. Bitcoin is extremely accessible. There's incredible guides out there, and the other side of this is, well, we shouldn't be encouraging people to sort of tie their Bitcoin to the traditional financial system. The whole idea is that you sort of remove yourself from it, right? It's not only banking the unbanked, but it's unbanking the banked, which I think is very important. But it seems like an interesting or potentially interesting innovation nonetheless. Remains to be seen whether it's just a fluff piece or whether it actually
Yeah,
amounts to something.
it'd be interesting if you could load it with like a gift card. So obviously the easiest way to do that is if you had fiat cash, you can go to a store, buy a gift card, use that gift card to fund that card, or in the reverse, if you wanted to put Bitcoin on it, and then you kind of use that as a partial collateral for buying things.
Oh yeah, so it says he's just looking to take advantage of the card. We'll simply need to sign up, blah 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 blah. Then you have the option to fund the account with assets, and one of those options is Bitcoin. So if you use Bitcoin, then the account is instantly funded, and then you can go from there. So if you're using something like Samurai Whirlpool, which is a CoinJoin implementation, then and if your Bitcoin is non KYC, then this would be an interesting potential bridge to the traditional financial system. So that could be very cool.
Definitely. Q, you got anything else there?
Not on this. I think it's time though for a dramatic reading. So for those of you who do not have yet, be sure to go hop on over to the Bitcoin Magazine store, get your copy of the Moon Mag. We have the latest issue coming out momentarily. It is not out yet. But for those of you who do not really grasp the quality of what you can read in here.
You gonna read us another cartoon?
No, this time I made sure to pick an article with words. I won't read the whole article, so I won't bore you guys to death. But I want to just share with you some of the cosmic stuff in the Moon Mag, which is available at the Bitcoin Magazine store. You can get 10% off using the promo code FOMO. How to Explain Bitcoin to Little Green Men by Shinobi.
I don't know what this voice is, but I'm here for it.
You're standing on the side of the road. A bright, blinding light flicks on above your head, and a little green men float down from the sky. There is literally a grammar mistake right there. Oh, no, I'm an idiot.
Scene. All right, moving on.
And little green men float down from the sky. You have, by pure happenstance, found yourself as the first ambassador to extraterrestrial life. What do? Explain how blockchain works, of course. So they don't run away thinking we're uncivilized barbarians. But how do you explain things to aliens that don't speak any human language? Well, you're going to have to buy this magazine and read the article to find out. Promo code FOMO, get 10% off. Anything at the Bitcoin Magazine store, from magazine all the way down to merch. I got the hat got nixed from my background. Apparently it wasn't a good vibe, but whatever. As we discussed, CPI.
I was getting a plastic bag ready to just put over my head and end it all.
I was that bad. The dramatic reading was that bad?
No. So I'm a very impatient person, and it was more the anticipation of you reading the entire article that was going to drive me to suicide. So it was like I had this whole thing planned out in my head. It was like after 10 minutes, my eyeballs are dripping out of my face, and I just have to end it to the pain. That is not to say there's anything wrong with the article. The article is actually very good. I read it myself. It's just the dramatic reading was just too incredible. I was going to be shown up for the rest of my life, and I couldn't look in the mirror anymore.
All right. Well, that's the Moon Mag. Get your copy of it. We do have an article by our own Alex McShane that is in this Moon Mag that I believe is available on
Bitcoin Magazine's website as of today. We have released that
yes.
article. So be sure to check that out. We also released Pete Rizzo's profile on Safety Namus. So be sure to check that out. Very interesting article, very interesting read for those hardcore Bitcoin standard believers. I think it's worth your time to take a look at what Pete Rizzo had to say after spending some time with Safe.
Yeah, all joking aside, it is actually a phenomenal article, or rather a phenomenal episode, edition. What's the right word?
Supplemental material.
No. What? I'm totally blanking on what the right term for the edition. There we go. It's an incredible edition of the magazine. Everybody should check it out. There's also an incredible article by Aaron von Weirdum all about the sort of cypherpunk ethos and the precursors to like cypherpunk. Yeah, it's got great stuff in it. Do check it out. And as you mentioned, we're going to be releasing a lot of the articles on the website. So they're long form, they're like investigative pieces. It's like the polar opposite of what we do here, where we just shit talk and say whatever comes into our head. These are like well thought out narrative stories. Each one has an arc and, you know, heroes and villains, and they're fun. Anyway, moving on. What else we got, guys?
Wanted to also just remind everyone, Bitcoin 2023 tickets are available now. Prices are going to go up next week. We're going to have some really exciting announcements coming out over the course of the next month. So be sure, if you're not following us on Twitter, to pop on over to Twitter, follow myself, P, Chris, Bitcoin Magazine. Like, if you're not following Bitcoin Magazine's Twitter, but you subscribe to our YouTube channel, actually reach out to us. I want to like hold your hand up like a champion and say like, we got one. This is someone that the Twitter account didn't give us. Last bit of news that like we could share. We've already talked about this, but Senator Lummis actually had a very interesting conversation via Twitter with both Neil Jacobs and with Shinobi, where Shinobi presented a very interesting question and Senator Lummis took a very Bitcoin stance on it. Shinobi presented the question of, does Bitcoin use enough energy? To Lummis's response of no. And I think that's a very, very important signal. I hate this because like I'm still mad at Lummis, but we need someone in DC who understands that. And I think it's a very important sign that she does understand it. What she does with that understanding remains to be seen. But that's my final thought. I don't know if anyone else wants to chime in. I may be trying to justify Lummis a little bit to make up for how shitty I felt after reading her bill 2 days ago, but cool, good talk. We're going to cut to a commercial break, and we're going to be joined by Jimmy Song for another Bitcoin song sheet. So stick around. back. Thank you for sticking around through that commercial break, and we are joined by none other than Jimmy Song. Jimmy, how goes it down in the great state of Texas?
Well, it's like altcoin central at the moment because of what's going on. But the Bitcoin plus was the last couple of days. I got to speak at it, and that's a very good developer conference. Hats off to Nifty A and the team for getting that together, especially in the face of all the altcoinery that's going on. So yeah.
I wonder, like, I remember at Bitcoin 21, we had a few randos like standing outside with signs, essentially like trying to say like, "Oh, Doge is a better coin than Bitcoin," or whatever bullshit that they wanted to do. And Jimmy, I'm kind of expecting you to go stand outside of Consensus with like signs saying Bitcoin is the only crypto. There's no second best. Whatever you want to put on the sign, but what would your sign be that you're going to hang out and hold in front of Consensus? What would it say?
I honestly, like, I'm actually speaking at Consensus twice. So I'm speaking once tomorrow and once on Saturday. And the deal that I made with them was, okay, I'm going to speak about Bitcoin only. And I want to make sure that I communicate the message of Bitcoin to these people. So my talk tomorrow is going to be about fees and what the outlook of that looks like with a bunch of other people. And on Saturday, I'm going to talk about Taproot to a Bitcoin only audience. At least that's what's supposed to happen. So I think my message would be something like that, where hey guys, like, stop wasting your time on these timeshare presentations. Like, let's talk about Bitcoin instead, because I mean, basically everything else is gonna be timeshare presentation like. So
I will not hold it against you, and I will very proudly say, "Hey, I know that guy."
yeah.
The video were to circulate of Jimmy Song just interrupting one of these shitcoiner presentations. That's all. That's it. We don't have to talk more about Consensus.
Yeah, I don't know. I like, you know my history with it. I had that famous thing going on before. So, I mean, I'm not opposed to doing stuff like that. And certainly I could go wear my black hat and all that. But, I don't know. Like, I don't know if that's something that they're really interested in at the moment. So, yeah, it is what it is.
Fair enough. Before we dive into this week's song sheet, we had a lot of news coming out of the regulatory space. And as one of the authors of Bitcoin and the American Dream, I'd love to just get your initial thoughts or reactions on this bill that is being proposed by Senator Lummis and Gillibrand.
Mm-hmm. Yeah. So very exciting bill. It'll give a lot of reasonable sounding regulations. For example, you don't have to report anything under $200, especially like lightning payments and things like that. And they don't have to go through the tax regime or the IRS or anything like that. And that's huge, because then a lot of the sort of like smaller payments that we make at Bitcoin conferences and stuff like that can be taken. I think originally that was supposed to be 600, but it got brought down, I guess, in negotiation somewhere. It's also exciting that you have a Democrat on board, not just Lummis, but Christine Gillibrand from New York. And I think that that's indicative of how important this issue is becoming. New York just passed the whole mining ban on non-green energy or something like that. So I think Gillibrand is showing that there's two sides of this coin, right? Like there's not just this very anti proof of work kind of constituency in New York, but her, Eric Adams, some other people, they definitely are dipping their toes into the Bitcoin political waters a little bit, and trying to sort of distinguish themselves from maybe the more radical wing of their party that thinks like, we should, go backwards in civilization or something like that. So, I see this bill as an excellent step towards reasonable regulation. And I think Cynthia Lummis is once again leading this effort. So yeah, I'm fully in support of it, and yeah, can't wait.
I love the little Jimmy jab right there. Like, I mean, if we do this, we're just gonna go back to the Stone Ages. But sure, yeah, be an idiot. We also saw a very interesting development out of New York State where you saw this crazy bill getting proposed, getting pushed through, and now the governor turned around and was like, "I'm not signing this. Like, no, like let's talk this out." I mean, what is she really saying is she's waiting for the Bitcoin lobbyists to come give her a little visit. But it's interesting that you can see these arguments forming within the party lines. Like you say, you have some Democrats like a Liz Warren who's just Bitcoin is the devil, proof of work, energy, and you see a lot of these different buzzwords get thrown around. And I'm curious, where's the first battle, the first real battle going to be fought, you think? We saw conversations happening on Congress between proof of work and proof of stake. We haven't really seen a conclusion drawn from that yet. We're starting to see a lot of conversations around energy consumption. We see in your state regulators working with miners to be more efficient about the grid and the resources that the miners are using and how much resources citizens need. And I'm curious, these are just two examples, proof of work versus proof of stake, energy consumption. Are these maybe the first battlefronts that Bitcoin is going to have in the political realm, or is it going to be something different?
Well, it's a great question. We know where those things are coming from. I mean, we know that Ripple is funding a lot of this stuff, and this is their chosen attack vector. And I think, well, as Bitcoiners, we're going to be playing defense for a while, and it depends on who's attacking us. If it's the Ripple people attacking us, then they're going to have this ridiculous proof of work is bad argument, or hey, you need to change your proof of work to proof of stake in order to be compliant or something like that. And they'll throw millions of dollars around. I don't think they'll be particularly successful, except, I mean, like they obviously got something through the legislature in New York. But, even within the Democratic Party, I don't think they've, thrown enough cheddar around to make it work. I mean, politics gets very expensive at a certain point if you want to take advantage of stuff like that, especially when you have a lot of vocal Bitcoiners. I think the Black Bitcoin billionaires like wrote a letter like against this bill in New York, and stuff like that matters to a lot of those people. So you're not gonna see as many Elizabeth Warren's. I mean, she's got a very safe seat in Massachusetts, and that's a very different prospect than, say, somebody from Ohio or something like that, where you're going to have to fight for your seat. And it's not a coincidence that you have people like Sinema, who's one of the more conservative Democrats, I would say, or the more moderate Democrats, supporting stuff like this. Gillibrand, she's in New York, and it's kind of surprising that it's her, honestly, but that's like politics makes strange bedfellows. What can you say? I'm told that Cory Booker is very much on board with this sort of thing too, and he's from New Jersey and a very popular person in the Democratic Party. So I don't know. It's going to be interesting because money only takes you so far. It really does affect a lot of people, especially a lot of Black people who have been screwed out of the system. In their ability to pass down generational wealth and stuff like that. So they're fighting for Bitcoin and saying what the heck are you guys doing? So I don't know where the next real front on this battle is going to be, but really depends on who our enemies are and where they choose to fund things. Because like any enemy, like they're not gonna go at you on on your strongest front. Usually they're gonna probe for a weakness and try to exploit that hole or something like that. I don't think this one's a very good one. because you get pretty much no Republicans on board on that, and you get maybe a small portion of the Democrats, but that's not going to be enough to derail something as big as Bitcoin.
Like, we don't need to spend all day on this. I want to give you, I think, a cap, but I'd love it if you maybe shared what your argument would be if you were to, you're not on Bitcoin Magazine Live right now. You are sitting in DC. You are standing in front of Congress, and they are asking you, what is the difference between proof of stake and proof of work?
Yeah, I would say, well, proof of work solves the Byzantine generals problem. It's the ability to know how to continue the ledger without when you get different sort of data from different places. That's it. Like, how do you figure out what's the canonical chain without some sort of a central authority? That's what the Byzantine generals problem is. And proof of work solves that. You just go with whatever has the most proof of work, and whoever has done the most proof of work, that's your chain. And as long as everyone's coordinated on that, you have synced blockchains. You have you have databases that are completely consistent. That's the point, right? Like that's why you need proof of work, so that you have this decentralized coordination without any center. Proof of stake, it's not like that at all. It doesn't solve the Byzantine generals problem, and you need some sort of authority to tell the people that are signing, hey, this is what you need to sign. And that kind of takes away the whole point of a blockchain in the first place. It's if you have proof of stake and you have some authority that's telling you what the right thing to sign is, then you might as well just have everything in one place, right? Why go through this decentralized and name only theater in order to I don't know, like get around regulation or whatever? That's essentially what they're doing. So proof of stake is a very different animal than proof of work, because it requires some coordination between the participants in order to execute. The whole point of proof of work is that you don't need such coordination. You don't have to listen to anybody. You just look at the data objectively, check to see if it has the actual proof of work, and then you can move on. With proof of stake, lots of people can sign lots of different things, and they can deceive you as long as they have the will to do so. And as soon as there's a profit motive, there it goes. It's there's likely to be some sort of subversion of whatever consensus that you're trying to achieve, and you get inconsistent databases, at which point you have a fork coin, and you have two separate databases that have completely separate data. So that's a very bad situation to be in. I would say from a technical standpoint, proof of stake doesn't solve what proof of work does.
Do you hold, this is going to be the last DC question, then we can get into this week's song sheet, I promise, because, oh man, I felt attacked at the bottom 10. I might be more FIAT than I give myself credit for sometimes after I read your work, but I'm taking this from our chat. We see Jerome Powell and the decisions he has made over the course of the last, how many years has he been in power now? 6 or 4? Regardless, he has made poor decision after poor decision after poor decision, continues to be given his position. Biden essentially reinstates him, lets him stay for however many more years he's going to stay. And I'm curious your thoughts on whether it is Powell to blame for the mismanagement of the Fed, or if it's the people who are putting him in these positions and telling him what to do.
Yeah, it's a hard question to answer, because we don't know how these decisions are made. We like to think that it's just like one person that says this is the way it's going to be, and y'all are going to do what I say. But that's not how politics works. Even at the highest levels, it's there are all sorts of political considerations and stuff, and these people get put into these positions because they listen to the right people or whatever, and there's some level of influence that other people have over them. That's why they get put in those positions. If they were completely independent and could do whatever they wanted, they wouldn't have gotten to where they did. So it's hard to say, but I suspect that a lot of the blame is just sort of like organizational momentum. The Federal Reserve is an organization, and like any big organization, you have a certain way of doing things, and it tends to protect the people that are rent seeking in some subtle way, and that's the way the Fed operates is to perpetuate the Fed continuously. And that might be tightening at the moment, and before it was loosening. But I mean, the existence of the money printer is the problem. It isn't necessarily that, oh, Jerome Powell's done such a terrible job or whatever. Who knows how he's done his job. The existence of the money printer means that there's always this possibility for lots and lots of theft through inflation. And that is indeed what's happened the last couple of years.
Let's move on now to fiat marriages. I loved how you started this by attacking Ronald Reagan's decision in the state of California and I want to make sure I get this right. He revoked the no fault divorce,
or he created he signed into law of no fault divorce. Yeah.
Talk to us a little bit. Like what effect did this have on just how divorces could be handled, the divorce rate in general, and like what this has in turn led to in 2022?
Yeah, so marriage has been something that's been government regulated, for maybe a couple of 100 years or something like that. And largely it was at first to like enforce, interracial marriage laws or something like that. You can't, a person of this race can't marry a person of that race. Later on, it became, a way to enforce the anti-polygamy laws of the Mormons and stuff like that. But
I ask some clarifying questions there, because I thought that was super interesting. There was one sentence in the article about that, but I was trying to understand. So prior to, recent history, was marriage was there not any legal ramifications around marriage? Was it only
there were. It's a contract, right? Like you're promising something, and like any contract, you have judges and stuff, but you don't need to go and register the contract or anything like that, which is what the state requires now. So if you and I agree to sell you pork bellies in 3 months for this much money, and I don't fulfill the contract. It's a bilateral contract, but then, whatever arbitration clauses we might have, we would go to a judge, and the judge would say, okay, Jimmy didn't fulfill the terms to P, and therefore here's what would be a fair compensation for not doing that, or whatever. That's how marriage contracts used to be settled as well. It's okay, you promised fidelity, you promised this, you promised that, and you didn't do it. So therefore, this is, this person's at fault for the dissolution of this contract, for breaking the contract. Therefore, you would have to do that. So it was a private contract. It wasn't regulated by the government at all in that sense. But, starting with some of these like, interracial marriage laws and anti-polygamy laws and stuff like that, the government stepped in and said, well, okay, marriage contracts have to be this way, right? Like it has to have these elements in it. And in particular, no-fault divorce was so bad in the sense that, okay, like you can't assign blame whenever the contract is dissolved. So that means you can't really promise fidelity, or there's no legal consequences for not being faithful, right? And that's kind of the whole point of the marriage contract. I promise basically to be true to you, right? Like I'm not going to go have sex with anybody else or whatever. And that is the essence of that contract. And they took the essence of it away with no fault divorce, saying, okay, well, we're not going to declare fault in any sort of divorce proceeding. and we're just going to split things, whatever way the judge decides. And generally these days, I think it's way more favorable towards women. They almost always get custody and stuff like that. So it ends up being a terrible deal for young men in particular. But it's heavily regulated. It's instead of making whatever contract you want, which is what people used to do, and this is why you had witnesses at your wedding. It's okay. What did you promise at the altar? Right? It's I promise this, this, and this, and the other and so like you have all of these. That's why you have witnesses, right? Like that's so they could say, okay, I was there, and this is what you said, and like you clearly didn't fulfill that. And the community was involved in sort of enforcing that contract as well, and saying, well, you promised to do this and you didn't do this. That means that you're going to be at fault if you don't do things this way. That's what a marriage was, right? And it's even like higher than a contract in the sense that it's supposed to be a covenant, right? And like that's Christian language. It's meant to be something that you don't just promise to the other person, but you promise before God. It's supposed to be like holy. It's like at another level. It's one thing if I'm breaking some business contract with somebody, right? Like that's, bad, but not quite as bad as like breaking a promise to God. That was the idea. But the state came in, regulated it, and made these contracts standard and saying, okay, well, whatever you want to promise, here's what you're actually promising, which is, okay, like you agree to share all this stuff and do all this stuff, and in case of divorce, this is what happens. That sort of thing.
Can I ask, were there other types of covenants? I mean, there must have been like other types of covenants that were sort of religiously based, or was marriage the primary kind of covenant that people made that was kind of recognized?
Yeah, I mean, I would say baptism is one, and in Muslim culture, there's like you stop being Muslim, that's a very serious offense, and there's
because you're breaking
all sorts of because that's something that you publicly declare, and that's a covenant between you and God as well. And I think in Jewish culture there's a whole process of becoming a Jew that like there or Jewish conversion and all this other stuff. But yeah, they usually have very serious significance, and you have witnesses around all of this stuff, so that if you do break these things, then there are some serious consequences associated with them. And that's the idea of a covenant. Contracts, I mean, like I kind of agree in the sense that like somebody needs to enforce contracts, right? Like if you break a contract with somebody, what do you do? And if you agree to something with somebody and then you suddenly break it, somebody has to come in and, you have to have somebody be able to say, okay, well, here's what's fair, and here's how you settle it. But like this is like no fault divorce takes it to another level, because it's just saying, okay, instead of figuring out what's fair and giving sort of judges some leeway on figuring out, okay, all right, you cheated on him. Clearly, that means that it's your fault that the marriage is being dissolved. So therefore, like we should be more, we should give more consideration to the aggrieved party. There's no fault ever, and we just have to split things however way based on their capabilities as a mother and father, or whatever, and not at all on fault, which is the basis of how you determine who gets what in a contract dispute.
Interesting. So one thing, so I'll say there's definitely a lot in this article that I'm like, oh, I totally do not agree with you on that, which is great. One thing that I thought from the beginning is, would you say that, because when I first read the first part, my conclusion was like, oh, we agree that the basis for this problem is the government stepping in and being like, I'm from the government and I'm here to help. Would you agree with that, I guess?
Yeah, absolutely. And it's their standardization of the marriage contract that's been the problem, right? And so much of the trauma around divorce, like, and you can see it just in the evidence, like since no fault divorce laws have gone into play, divorce has skyrocketed, and it's way more traumatic to the couple and to the children and to all of the immediate family around them. It's become this like giant industry now. And like the way I describe it is like there was a survey done a while ago about like traumatic life events and how much they hurt the person internally. And they had stuff on there like, you know, loss of a loved one, you know, dismemberment, right? Losing an arm or something like that.
Yeah.
They also had divorce. By far, the number one thing was divorce, right? Like by a good margin. So like in a sense, it's like worse than dismemberment. Emotionally, we're all like sort of like anyone that's divorced has kind of gone through like an emotional dismemberment, right? Like it's a very traumatic and difficult thing. And we've only encouraged it with this law and making it like super standardized via government. And I agree with you that it probably shouldn't be regulated like this at all. If anything, like people should be free to make whatever vows they want. I mean, if you want to make a vow saying, okay, well, you know, we'll be together for the next 5 years, and then if that works, then we'll have an extension for another 5, and you know, you can even promise fidelity during that time or whatever, and make it marriage-like as possible. But as soon as the government steps in and says, okay, here's the standard contract, doesn't matter what you want to agree to, we are going to make it this way. That produces all sorts of problems, and that's essentially the problem here.
Love it. Okay, yeah, that was gonna be my next question. Like, what if people want to have these sort of like different types of agreements? But you literally just answered that. Yeah, that's super interesting.
I mean, right now I'm thinking about Fiat Mind. In How I Met Your Mother, there's a scene where Barney Stinson, the Playboy character, is getting married, and he starts to write his prenup, and it's like the joke is it's like a stack of papers like this big, and some of the rules are for every 10 pounds the wife gains, like that's one infidelity that he can have, kind of a situation. It's like the absurd of most absurd rules, but like that, I think to your point, P, like in theory, you could create your own marriage contract and like dictate the most absurd of rules.
I mean, yeah, but nobody no one on this conversation anyway is advocating for that. But
absolutely, everyone in Bitcoin should have a prenup.
Yeah,
the thing about a prenup is that it's basically a modification of the standard marriage contract in case of divorce, and it's a way to take some control back. And I kind of can't blame people that want one, because the standard marriage contract imposed on you by the state is just so incredibly vague and not a very tight union. Like I said in the article, it's a very loose union, and either party can break it for pretty much any reason that they like. So like if you want to have sort of like a supplement that makes sure that you're bound together a little better, I mean, I don't know how enforceable that is, and like judges are very wishy-washy about enforcing some of it. But at its heart, it's a legal problem, because of the government's ability to standardize marriage contracts, which I absolutely do not think that they should have the power to do.
I mean,
I agree.
In this terrible state of California that we've already talked about, their marriage rules, like you don't even have to be married to someone, but under the eyes of the law here, if you live with someone for 10 years, you are in essence married.
Yep, that's common law marriage. Yep.
Like a friend right now, after a 9-year relationship that just broke up, and it's like a whole thing. And I, being the jackass, was like, hey, at least you guys don't have to go through all the divorce stuff, because like you got out of it the year before. I'm that asshole.
Yeah, and the reason why common law marriage exists is because, you know, for a long time you never registered your marriage with the state. So like by common law, it's like, well, you've been presenting yourselves as married. Maybe there were people at your wedding that can testify to it. You're considered married under that standard because it's none of the state's business. But once you have to register, now you have this weird, I don't know, like combination between like legal marriage and common law marriage, and they're trying to bring the two together and stuff like that. And it's really kind of a terrible system because, in a sense, when you're common law married, you're married according to the contract that the state imposes. Well, it's like, it's basically saying, hey, you two, here's a contract that you agreed to, despite you never
Even though you
agreeing
didn't agree
this
to it. Yeah,
contract.
exactly.
Like,
no, it's cool.
It's so stupid.
We're saying you agreed to it. I mean, that's fine, right? I think the other side of the statement you made, that basically that because people can sort of dissolve a marriage for any reason, that facilitates all these sort of bad things. And what I was gonna say is, well, but do you because you're mentioning like the sort of emotional dismemberment, and I was thinking like, well, do we want to force people to be in relationships if there is like profound dysfunction, and maybe that is actually more damaging for the people involved and children, which I think is true. But I think then taking the other side of my other side, I think you might say something like, well, just like Bitcoin, where you have transaction finality, like you should do that exploration before you agree to be married for the rest of your life, and you should figure that kind of stuff out.
That's one aspect of it, but like there were pre no fault divorce, there were divorces, right? Like, and it was perfectly legitimate for you to.
That's a good point. All right, you got me there.
To divorce somebody if they are mentally torturing you, or if they're physically abusing you. The thing that no fault divorce added was the ability to end it for any reason. Before, you had to actually have a good reason. My partner cheated on me, or they are physically abusing me, or they are taking all my money and forcing me to stay at my house and not letting me out, right? Like whatever it was, if you had a good reason, you could get a divorce. It's not saying like you can't ever divorce. Now you're forced to be married and you're in this union no matter what. If like part of the marriage vow is I promise to love you and cherish you and all that stuff. If you're not doing any of that, or if you're breaking the contract in some reasonable way, then of course you can get out. That's called fault. At that point, it's the other person's fault. And I don't think you have to like force anybody to do anything, especially if the other side is breaking their side of the contract. That's fine. The thing that's really bad is that people are using it as any excuse, or like they don't have to give a reason. They don't have to justify it before a judge or a court or anything like that. They just sort of do it and say, you know what, like I'm unhappy. It doesn't, I'm not even sure if it's you, but I'm getting out of this marriage. Why? Just because I don't feel like it anymore, but you promise. Well, like, it would be one thing to say, well, you keep punching me in the face. That's why I want to get out. It's another to be like, well, I just don't feel like it anymore. It'd be like, okay, I just don't feel like paying you rent anymore. I don't feel like paying my, insurance premium on my car anymore, but I still want you to, pay for my, there are contracts, right? Like that's the whole point of a contract. You make agreements and consideration for something that the other person is providing. If one side breaks it, then it's fine to dissolve the contract, but you have to have a reason. And that's when,
So I think the solution to kind of the vague like concern that I'm stating is, again, you would agree about these things prior to the contract. So if people wanted to have clauses that were like, if I'm unhappy for any reason, then you and I might disagree with that, agree with somebody who wanted that. But at the same time, it sounds like you're saying like, yeah, sure. Like if that's what they want to agree to beforehand, then I guess they can.
Yeah, I mean, legally, generally, you want something a little more objective. So if after like 3 separate psychiatrists say that you're profoundly unhappy because of the other person or something like that, then maybe I don't know. Like there are ways to sort of like figure that out. The thing is like at the time, I could kind of understand why Ronald Reagan signed that into law and why lawmakers were so enthusiastic to adopt it. Because so many people were just lying, right? Like I think New York's the last state to actually add no fault divorce, and before that there were like women that were paying their husband's secretaries to say that they were having an affair so they could get a divorce and stuff like that. So like it gets kind of like there's a lot of like human depravity that shows in divorce court. And I know this because I've been an expert witness in like divorce cases or whatever.
No.
But like those are some of the most like traumatic places to be. And like and it's only gotten worse with the no fault divorce stuff. And it's that's the irony of it all. They tried to stop a lot of this lying and stuff, but actually it's gotten even worse because, you know, like a lot there's all sorts of false accusations that are thrown around in any sort of divorce proceeding because it gets so bitter. The thing is, like, once you have clear fault, somebody cheats on somebody else, right? Like, it's very clear who's at fault there. Then you can kind of have like, okay, well, one person knows that they have less leverage because they're the one that cheated or whatever, and you could come up with some sort of settlement. But if it's like it's not clear whose fault it is, it actually makes the fight much worse because it's your fault, and this is why divorce has gotten way more traumatic with this debasement.
Interesting. Q, I've been going for a while. What are your thoughts?
I mean, I want to talk a little bit about now the effects of President. I mean, but there was also one little quip I wanted to throw out. Another legitimate reason in the past that was given to divorcing your wife was if she did not give you a son, as King Henry VIII kindly did to a majority of his wives.
Well, that was actually an illegitimate reason, which is why the Catholic Church excommunicated him, actually. So even a king couldn't divorce for that particular reason.
Q, you just got hoisted on your own petard.
Yeah, I mean, you kind of put like the thing
so
is
much.
like there might have been legit or illegitimate reasons, and they might not agree with the social mores that we have at the present moment. But at least there were rules, and you kind of like agree to those rules before you get into the marriage, right? Like, it's a voluntary contract that you enter into rather than here's a contract that that you agree to, even though you didn't actually agree to it because we're the state and we could do that. And yeah, that's what's an anathema.
You know, we reference a little bit in this article, maybe more so at the end than actually in the meat of it. Well, actually, we'll get into the Tinder of it all later, but I want to get a sense of this idea that you proposed of how money and what marriage has become are no different. You bring up a very interesting fact that the no-fault divorce began in 1969, and just 2 years later, we're off the gold standard. I mean, our standards for marriage quickly dissolved, and so too did our standards for money. How do you see these two events or things in our society interwoven? Yeah,
so a lot of it is sort of like this very inward turn that happened as a result of fiat money. So, you know, post World War II, I think mostly through the ability to money print. I brought up in the article the whole Great Society programs, which is once the government has this power of money printing, it becomes incumbent on them to pretty much solve every problem for you, right? Like, and this has had a devastating effect on the Black communities, as I point out in the article. But part of it is that, okay, well, this problem exists and the government must solve it for me, or else they're being complete jerks, right? It's kind of like that Superman dilemma. Why isn't Superman constantly rescuing things? Because he's Superman. He can like go do everything. Why isn't he constantly doing something? That's what the government becomes with the ability to money print. And in a sense, no-fault divorce was sort of like trying to take people out of their own misery a little bit, right? It's okay, well, you're having to lie and do all this stuff in order to get out of this marriage. We're just going to make it super easy for you by imposing this top-down contract on every marriage, no matter what. And it's that sort of like top-down imposition that ultimately caused the 1971 break with gold. And if you look at the history of no-fault divorce, California was just the first in 1969, but other states follow through over the next few years. So like they kind of occurred at the same time. And it was this inward turn of, okay, what are you going to do for me? Right? Like it's this, okay, how am I going to use the government to benefit me, rather than sort of like, what goods and services can I offer to the world so that I can make money? It's that sort of fiat mentality turn that happened in both things, where I talk about like this focus on the word love, which is really profoundly self-serving, rather than like thinking of it from a greater perspective of um, like a sacred order, or being a part of a family, or continuing a line, or anything like that. None of those things like come into play once you have this very self-centered focus, and that's the mentality from which no fault divorce, and essentially like having to steal more money from everybody else, which is what the ending of the gold standard did. Those are from the same sort of like root thing of focusing on yourself, which is ultimately from the turn to fiat money and being the world's reserve currency.
Sorry, I couldn't find where our Zoom chat was. I'm now curious. We have seen through the digital age, I think the monetization of love in particular. You see, like, E-Trade's been around since I was a kid, for Christ's sake, and like you see so many of the original inception of like a dating profile or online dating had this stigma around it. And I'm wondering, in your opinion, when did that stigma get shifted to now? Like, I've seen people who genuinely have gotten married to people they met on Tinder. And like, I'm going to be an asshole who says this, but like, I've been to way too many weddings at this point in my life to believe that every last one of them are going to be forever. Like, I'm that asshole. So I'm curious, like, in the present day, I feel like this shift in the value of love has exponentially changed. It is so far removed from what it was before I was born. I would say, I think the 90s was a good, that shifting point away with the internet, with the introduction of the internet, mail order brides. Like, if you have enough money, you can have love. And I'm curious, like, what, in your opinion, has caused this change? Is it just the incessant printing that has led to more money equals love?
Yeah, it's interesting, because even like like 50 years ago, like a lot of people thought of like a marriage in terms of duty and family and order and things like that, and setting themselves up and their kids up for the future, having children, like those are the main concerns. Like post no fault divorce, post 1971, it started becoming way more about, how do I be fulfilled through a marriage? It becomes sort of like this very much a self-actualization almost thing, where it's all about your own happiness. And if the marriage doesn't make you happy, you should drop it, like, whatever. Instead of, okay, I'm part of this order of this greater thing, and it's my duty to continue, or whatever. There's almost none of that now. And like, Tinder is a really good example of how that's become the primary thing, because once you remove stuff like duty and order, or even children, the primary thing becomes, okay, how do I make sure that I am satisfied, right? Like, either sexually or from a status perspective, right? Like, okay, like, will this person make me look good and at a party or something like that? And that's become sort of like the primary measurement stick. And of course, like, if that's your only measurement stick, then an app like Tinder makes all the sense in the world, because you have a lot more choices than you would in a traditional sort of dating environment, where there aren't nearly as many. But of course, that has its own effect, because most people I know that are on Tinder are serving Tinder and not themselves even, right? Like they think they're like making themselves happy. They're actually making Tinder, the company, very happy. But like all the men that I know on Tinder say it's like the worst thing that's ever happened to dating. All the women on Tinder say it's the worst thing that's ever happened on dating. So nobody's happy on that thing. But it's based on taking advantage of that selfish
I mean,
desire, right?
Some people are happy on Tinder.
Yeah, they're granted, yeah, there's
None of us are good looking enough to be happy on Tinder.
No,
I'm letting you
just
all know.
making a bad joke.
As someone who has used Tinder,
It's
none of
fucking-
us are
it's a
good
shit
looking
show.
enough.
Yeah,
Like, I'm a personality guy.
I'm so glad I got married way before like Tinder was a thing.
You're like, you kids and your crazy bullshit.
I
I think
it's sad.
Yeah. I mean, I think you're right. I think it's interesting though, because for me, I think that it's like one has to. It is not good for one to eat sugar all the time, because that will rot your fucking teeth, and we have evolved as organisms to process more complex carbohydrates, and it will destroy you and your gut. And I think like I'm just being long-winded and say that I agree with you about Tinder. It's very
It's like a sugary soft drink. It's Coca-Cola.
Yeah, that's what I'm trying to
right?
say.
Yeah.
I'm trying to say that you're better with words.
Well, I mean, and it's kind of true, because in a sense, like if you focus solely on love, right, which I define at the beginning of the article as sort of like an intensity of emotion. That's the high that you're always going to get through something like Tinder. Is okay, well, I feel desired, and I have that, like, and it's very addictive, right? Like for you, if you're getting that or whatever. So that's what everyone is after, and that sort of numbs you to everything else around the marriage, right? Especially stuff like children and legacies and family and like, and that's the thing, that's sort of like the message of hope that I was trying to convey at the end of the article, which is, if you are in Bitcoin, you start thinking about a legacy, about the future, about like sort of low time preference behavior. And ultimately, the real actual self-fulfilling thing from a low time preference perspective is the traditional view of marriage, where you do have fidelity for life, and where you do have this place to go raise children, where they have a stable environment to grow up in, and where you can like invest a lot into them. And make for some meaning in your life, rather than sort of, okay, I feel good right now, and therefore that's good enough. Instead, you're actually working towards something. And I think that's where a lot of Bitcoiners end up, is this place of wanting to leave a legacy, of having meaning, of doing something worthwhile, rather than just, it makes me happy right now, and I'm getting this emotional equivalent of a sugar rush all the time. And I mean, honestly, it's just going to make you emotionally fat and lazy and unhealthy, which I think is the unfortunate reality for most users of Tinder.
So we're about to now do, in my opinion, my favorite part of a Bitcoin Songsheet wrap up. And I will be honest, I'm going to do mine last. I've already told Chris what I'm going to do. I'm going to surprise you, Jimmy, this week with what I'm going to say. I will let Chris go first. I know he's really excited to share which one of the bullet points most spoke to him.
I love these bullet points, Jimmy, at the end of all your articles lately. I mean, the one that stands out to me is 10 things you won't do for love. And number 4 for you is sell your awesome MMO RPG character, a massive multiplayer online role-playing character on eBay. So I guess what were you trying to connect that with? I just want to hear you expand on it. I think it's funny.
So I won't name who, but somebody told me that that they may have gotten divorced because they were playing a little bit too much World of Warcraft. So I'm not going to say who it was, but I have heard this from somebody before. So yeah.
I love that. P, you're next.
Well, it's interesting because I love this list so much more. I misread it as like 10 things you should do for love, but I like it so much more as 10 things you won't do for love. And you're totally right. It's hilarious. I think quit drinking is an interesting one. I certainly drink, but I think that it can be a crutch for many, myself included at times. And I just think that's a very interesting one because it really is something that I think that for a lot of people, it's a form of self-medication that kind of like dulls you out. And it can be a great, social crutch, but I think it can, a lot of the time, even when it's not like a quote unquote problem, it can really take away from meaningful relationships and connections. So I thought that was an interesting one. It was deep.
I just listed stuff that I thought people had prioritized over love, because like they say stuff like, hey, I would do anything for love, right? I will do I love you so much, I will do anything. And then you list any of these things and they're like, no, I won't do that, right? Like it's that's the thing. They're like, what people say versus what their actions reveal is that actually it's not that much of a priority. They just like the feeling. It's a sugary drink, right? Like that's what it is for them, instead of this virtue that love is supposed to represent, where you learn patience and kindness and to not be envious or to not boast and all of these other things that come with love, or the virtue. Like it's all been thrown by the wayside, and instead you'd rather go drink or be lazy or flirt with other people on Tinder or whatever. Like that's it. This is the actual reality at this point of what love represents for most people.
So I'm gonna brag about myself because I'll be honest, I read this list and I think it like really, I mean, I love my girlfriend. I love you, Stevie Moore. Thank you very much for being a part of my life. And reading this list, I was like, I've done half of these things for you, and it only validates how much I love you. So instead, I'm doing this to clip and send to her later.
Strong. Okay, we get it.
Things I have done for you, Stevie Moore, include put my phone away when you ask. I tolerate your unemployment, but you're unemployed right now. If anyone knows of any recruiting jobs open, shoot me a DM. I've uninstalled Tinder and other dating apps. I quit smoking cigarettes, so I didn't quit drinking. I don't really drink. I will have kids with you one day. I have sat through many a boring dates, and I'm saving and getting us out of debt. So, boom.
There you go. There's true love for you. True love.
Tell me I don't love you.
Cute.
Look, if nothing, I mean, you're doing some of the things on the list. I mean, that's all it takes. Just a few of them. You just got.
I will not do deadlifts. I will not do deadlifts for love.
Oh, you will. As a man, you have to understand your testosterone levels, start fluctuating as you get older. Deadlifts are a good way to get them back. So you'll do it even if it's for yourself, so that, she can see you more as a man. Yeah.
Whoa. She sees me plenty as a man. Thank you for that.
I'm just saying later on, as things happen, and this is also why a lot of men are into red meat, because that's also a testosterone boosting thing and stuff like that.
Look, I'm gonna come down to Texas. We're gonna eat some 72-ounce steaks and do some deadlifts, Jimmy. That's my takeaway from this conversation.
Yes, that's a date.
Jimmy, for the people who live under a rock, who don't actually know, where can they stay up to date? Where plug away with whatever you want to plug right now, my friend.
All right. Well, I have a website, programmingbitcoin.com, where you can sign up for my newsletter and learn more about my books and stuff like that. But my Twitter is @JimmySong, and that's where I post almost all of my stuff, including podcasts and things like that I'm on and that I produce, that the various Bitcoin Songsheet articles that I make, I will record and post them up on YouTube as well. And so a lot of different places. Hopefully you find me at one of those things.
Give him a follow if you're not already, everyone. I don't feel like going to commercial and rapping. Jimmy, you don't need to hang out while I do our obligatory shills. Thank you so much for joining us, man.
Thanks for having me, guys.
Always a pleasure.
As a reminder, Bitcoin 2023 tickets are on sale now. Lock in these tickets before prices go up next week. These are the cheapest tickets available. They will never be cheaper than this. You already missed the cheapest tickets, but these are the next cheapest. So quit being a cheapskate and buy these cheap tickets. I don't know how many more times I could say cheap without it freaking everyone out, but cheap. Moonbag. Honestly, he's going to hate this. He's going to be so bad. Everyone needs to go buy the Moonbag because Alex McShane has a typo in his article. Look, Alex McShane is one of the smartest, well-spoken, like understands the English language better than most people. And you need to have this receipt for the future. Just trust me on this. If you don't even subscribe to the Moonbag, just go buy this and like save it so you have the pages with Alex McShane's article with the typo forever.
I mean,
it will be the last typo Alex McShane ever publishes. I'm telling you right now.
To be fair, publishing, as I understand it, a simple man, publishing an edition of a magazine involves hundreds of people, if not, by extension, thousands. So I think it can be said, I mean, there is an editorial team whose job it is to review all the word pieces and make sure that they fit together in the right way in the standard grammatical format. I don't know if McShane can be blamed for this atrocity against the human language.
No, it's not his fault. It's Joe Rogers' fault. It's entirely, completely, and utterly Joe Rogers' fault.
We're coming for you, Joe.
We're coming. That's a wrap, guys. We'll see you tomorrow. Have a good one.
Adios.